In the meantime, then we will start to get ready to rock here, and I'm ready. And thanks for having me back, and welcome aboard, everybody. It's always a pleasure to present with Anna and gang. I always enjoy being here, and today we're going to talk about what we're using as we call it the day trader's dream, which is a method we use for day trading, which is all done through auto trading and through a broker. And all you have to do is just sign up and become a member, and all the trades are done and executed for you because they are time sensitive. But in the meantime, I always tell people, show up every single moment like you're meant to be there. And, we'll talk about the economy, and it's time to take care of yourself. And in the meantime, I always have to show the disclaimer. And, again, everything involves risk. Options, futures, whatever you're trading, there is always risk. There ain't no free lunch, and nobody's handing out money. Okay, you have to earn it, and you earn it by learning and being prepared with the best methods. And I want to share this with you. I got this the other day, and I write for Kitco, and I trade every single market there is. If it's liquid, I'll trade it. I've been trading for 44 years as a floor trader for 30 of those years. But in the meantime, the paper rail over the past years is repelled by excessive money creation, by keeping rates so low for so long. They've just created a huge financial bubble. How else can you explain Bitcoin at 67,000? Well, I don't know. I think it's legitimate. It's the currency of the libertarian. Once the paper printing stops, the party is over. Will central banks let markets approach their true value? Well, true value is actually determined by markets, but just the comparison, and this was somebody who was making a case for gold. Since 1983, gold was 455, it's now 1800. 1983, the Dow Jones 1150, it's now 36,000. So which gave you the better return, no matter what the reasoning behind it? And that's something you want to remember, because we just had Jerome Powell reappointed, which I will say to you that is at least the devil we know. Okay, because the progressives wanted to get Lael Brainerd appointed, okay? And with Lael Brainerd, what you end up with is more free money, and of course, all these packages pass, and the bottom line is the middle class pays for all that. Nothing is free, okay? And for those of you who talk about market manipulation, okay, the markets very well could be manipulated, but it still takes two sides of a trade. It takes a buyer and a seller to exchange wealth, no matter what. So even if it's being manipulated, if they're trying to sell it, there has to be a buyer. Otherwise, it continues to fall and plunge. If it's being manipulated the other way, then there has to be a seller. So no matter what, it takes price discovery. Markets take price discovery no matter why the reason that they're moving. Too many people spend too much time trying to identify the reason why a market goes up or down, okay? When the price discovery, the price action, which is through trend trading and algorithm trading, which we're going to talk about today, will decide for you, okay? There's where you have to make your overall decisions, okay? You make the prices because, again, it comes to buyers and sellers and price discovery, okay? Now, day trading itself is a business of numbers. It's a math game. It's a math puzzle, okay? When you look at a trading model, okay, it is always determined by mathematical events, okay? You can want to make up reasons. You can talk about the Omicron virus and all the other crap that they try to make cases for. But at the end of the day, it comes down to numbers and percentages and probability, okay? And if you learn to follow probability, you will learn to have the best opportunity to make money. And we are trading an algorithm system, okay? Now, we traded not only as a day trader, we traded as a swing trader, we traded all over. Today, we're going to talk about a day trading model that we use, but it's always about the numbers. Trading is a game, okay, that is not luck. It is a game of skill, okay? Now, for those of you who are possibly game players, think about the events. If you're any good at poker or gin rummy or bridge or backgammon and others, but those four games are purely decided by math, okay? And the better player will win over time. They won't win every time, but they will win over time. But as long as you keep yourself at the highest probability of victory, you will always be in position to win, and you will eventually win, which then comes back to managing your money and trading the proper size. So you have to have a clear plan, right? You have to be ready, and you have to trade size appropriate to your bankroll, to what you're trading with, okay? The automation of trading, that's what we're going to do. We're going to automate, because if you've heard of the turtles, for example, we've got our own proprietary algorithm, okay, that is the same design, but better, I think. I know Richard Dennis pretty well. We traded together on the floor in the 80s, okay? But again, it's the ability to execute based on raw math and not the emotions of individual traders, okay? The individuals who think that they know better always lose, okay? Now we've got, obviously inflation is out of control. That's part of the reason, the added money supply. But again, all this stuff doesn't mean anything, okay? When you're trading, it's, again, comes back down to pure price action in the market, okay? So if you auto trade, okay, you minimize your emotions because you have none. You don't have a decision. The trades are made for you, okay? You minimize, you keep your disciplines because, again, you are not making those decisions. You get to diversify, okay? You don't have to worry about if your machine goes down. Everybody's internet has gone down from time to time, but the redundancy used at the clearing firms and at the auto traders, they never go down, okay? You get somebody who's monitoring the trades, consistently, and you never miss a trade, and there's no temptation to cherry pick, because we all have that same temptation, because we all end up with a little bit of an opinion, which is why it's best to take it out of your hands and let the models do their work for you. Why day trading futures is the best option? Well, first of all, options themselves, look, I grew up as an options trader, and my start of my career was 1980 on the SIBO, okay, as a member. And, options have implied volatility. The option does not necessarily move in tandem with the underlying asset because there's a big glitch like IV, implied volatility. Futures move directly. There is no implied volatility, okay? There is no restrictions for short selling. There is no FINRA day trading rule, which is ridiculous, okay? And by the way, that's not for FINRA. That's not for you. That's for the brokerage houses. They put that restriction in. They don't want you trading. That's why they give you the restriction, because there is no day trading restriction in futures where you can get much more leverage. Okay, you can use a much smaller account. And for those of you who trade, if you recognize it, one mini S&P, for example, is the equivalent of 500 shares of the SPY, which is, in other words, $250,000. With day trading margin, you can margin it for, let's say, $1,000, whereas if you're trading it in the spiders, it's going to cost you $125,000 minimum margin, okay? You have no overnight risk, which is why we're day trading, okay? It's time to invest in yourself. Are you ready to change your investing life? And, again, you look exhausted. It's time to let me drive, right? Okay, but auto trading worldwide. Now, we have the ability to trade worldwide, okay? We have the ability and some of our other models to trade worldwide as well. But today, we're going to talk about our letter of direction trading, which is for futures. And of course, they have their own risk disclosure, which is the Capital Trading Group. Now, again, there's risk in trading futures. Again, we always want you to be clear that there are risks, okay? There's always risk, okay? I've been trading for 44 years. I know all about risk, okay? But in the meantime, so they want you to be clear that you understand their risks, okay? They've been in business for over 30 years. They started together in 2006, but they've both been on the floor. I know them both from before they were CTG, okay? But now Sloan and Pat Lafferty are the two owners, okay? And they handle everything themselves. It's a great organization. I've got great service. So that's why I recommend them, because I vet everybody, because that's who I use, and they actually trade all 10 of my accounts, okay? Except for one that I play with when I'm day trading with my peeps in the morning. But what is auto trading? It's an execution process where trades are executed on your behalf You still control your account. You can still add or withdraw funds anytime. You can stop the trading and close your account at any time. In other words, when you're using a letter of direction trading, okay, LOD, they have no authority over the money in your account. They can only execute the trade that is instructed by the package or the software that we're using, which is my software and my design. And all they have the ability to do is execute based on that model and nothing else. So you're never at risk, and your funds are insured anyways, but you're never at risk, which is a good thing. Okay, again, if you're auto trading in futures, you don't have to pay for data fees. You don't have any emotions. You maintain control of your account. All clients receive the same price for execution. Okay, everybody gets the same price because it's done in a block order. Okay, there are no pattern day trading restrictions and Rule 1256 tax. If you're not aware of what that is, it's taxed at 60/40. It's much more favorable, okay, than taxes on equities. Okay, that's the one reason many people trade futures, is because the tax benefits are there as well. Especially, there's no wash rule, there's no limits, there's a whole bunch of advantages to the futures industry. Now, again, full disclosure, I trade them all. Okay, again, I trade everything, and I have option position open right now. But when I want to be active, I want to be active in futures because, again, for the tax benefits that you receive, and that's something to keep in mind as you go. Okay. Now, how does it work with CTG? You open a brokerage account with Capital Trading Group. They execute your account. Any live trade variances across client block are averaged, and all clients ensure that we see the same net for each trade. Client can see trades once trades are allocated, so you get to watch. You'll get a notification that there's a new trade. You get to watch, but we just don't want you trading it because we don't want you to be emotional. Okay. And how do you keep track of it? Well, you have access to daily and monthly statements, okay, as well as your 1099 at the end of the year. You have access to reviewing your 24/7 online portal. Again, it's full, everything is wide open for you to look at. Now, here is the program as it's been running. Now, we ran it hypothetical, okay, and then we've been running it with real money, and you can see where it changes. Now, we've been running this for a few months because we've done it for years, over a longer period of time, and we know that by back testing that it works. But here's when we officially started to track it. These were hypothetical results, okay, and here is real money, okay, in blue. You can see the dates, okay. They both made substantial profits. Again, there's no guarantee that will continue. There's going to be a drawdown. Please don't ever think, no matter where you end up trading, whatever you do, no, you are going to have drawdowns, okay? That is a part of the trading business. Drawdowns are part of it. They happen. They don't announce themselves. You go through them, and it's the key, not understanding that if you're following the correct protocol, that you're going to get the opportunity to make new equity highs once again. But if you get too aggressive, if you become over leveraged, if you do the things that are bad for you, then you end up hurting yourself and not allowing yourself to stay in the game long enough, okay? And in trading, the key is duration and management, okay? Which means patience, discipline, and manage your money, and don't trade too big for your account, okay? Now, algorithmic trading, which we use our own proprietary algorithm, okay, which we've been using for years and years and years, and use it under many different circumstances and many different time frames. But it's a mathematical formula that ties in everything that we teach, everything that we do, everything that is involved in trading, from the phases of the market, the different models, to standard deviations, to volatility. That's all equated for and accounted for inside of the algorithm, okay? So it watches the market and it makes the decision based on that price action. Okay, and in the model we're looking at today, okay, we trade on a 60-minute chart, okay? Now, the other important thing to know about the model that we're going to use is it only trades at what used to be the old pit hours, okay? You ask why only the old pit hours. If you look at the volume, you will see, for example, the S&P trades highest volume between 9:30 and 4 o'clock, with few exceptions. Okay, the currency markets trade their highest volume from 8 o'clock till 3 o'clock. Those are the original pit hours. Okay, even though there's no more pits, those were the original hours. So that is where the volume lies. So basically, we do not enter like a currency trade until the earliest we can enter a currency trade is 9 Eastern. Okay, and they're automatically closed. If they don't close during the day or reverse, they're automatically closed at 3 o'clock Eastern time. Okay, gold cannot be traded before 9. It is closed at 1. Crude oil, 9, closed at 2. Okay, and then the equities, the first trade can be at 10, and they're automatically closed at 4. Okay, no matter what, everything comes off at the end of the pit. Every trade comes off. Okay, and it's again, it gives you great control. It gives you great representation of market. And as you talk about options versus futures, and here's the big differences. Okay, if you look right now, if you're a watcher of options and you're a trader of options, you've seen prices skyrocket on the option side. You've seen the spider SPYs go from a 13% to a 25% volatility. Hard to make money when the volatility starts getting so high. Okay, there's always the people that say, well, futures are much too risky. Well, the future is really the same as options. Okay, because the only difference between the two is in the option model, you are paying a premium and you are buying the right. Okay, in the futures, you're buying the future. However, you're going to get out and you're going to be, the trend is going to reverse, or it's going to close at the end of the day. So you're really not buying the future, you're day trading it, and you will never make money, in my opinion, day trading options anymore. You're giving up too much of a bid offer spread. Okay, so it makes much more sense if you want to be active with futures for taxes, for every reason that we stated, and here they are. Okay, highly leveraged instruments. Okay, you get better use of your capital, you get higher returns. Okay, liquid markets. Remember, we only trade the futures that are in liquid markets. We don't trade illiquidity markets. We're not looking for them. Okay, commissions and execution costs are low. Okay, markets are much more efficient and much fairer. Okay, they're typically one tick wide. Okay, which you can't ask for much better than that. Okay, there's no short saying, there's no restrictions on getting short or long. There's no uptick rule. There's nothing to worry about. There is no time decay, and there's very simple pricing. And again, you don't give up a big amount on the bid offer spread. Okay, now it's easy to get started. Okay, you get small margins. Okay, a minimum tick size, no pattern day trading rule, and again, it becomes a simple model that is strictly based on the algorithms and the positions that you want and where you intend on being. Okay, and there is no emotions to what you're doing here. Okay, and at the end of the day, okay, it makes it clean, unemotional, and a matter of just trying to grind out profits, make money, and continue. But if you look at, again, just in a quick review, if you look at the difference in volatility, and as I said, in the spiders, okay, if you're looking at the option model, okay, we can see that volatility has jumped, okay, to, let's just go to the monthly expiration, and so we've jumped to 23%, okay. So the expectation of movement here is $22. 2 weeks ago, that same exact option, the expectation was 11. Again, so you're paying much more versus looking at a straight future product, okay, which the S&P, for example, here's the same product, but in futures, okay, which is in a one tick wide market. That's $12.50 tick size versus giving up in the $30 in the options. Okay, so you have so many more advantages to futures trading. Okay, and then when you want to day trade them, because you don't have to give up that big bid offer spread, especially when you get away from some of the more standard products. And I think that's, you know, what you want to recognize, okay? Because as you look at markets, okay, markets work in cycles and in price action, and all you're looking for is to be with the trend, okay, of any market, okay? And that's where you're going to find the greatest benefit, okay, of markets is by being with the trend. Now, you know, as floor traders, you could make a living either scalping, counter trend trading, or trend trading. As retail traders, you cannot make a living trying to be a scalper because you give up too much of an edge on both sides. Floor traders got a little bit of an edge when they got to trade, okay, and okay, you give up too much in between. So it's too hard. So the biggest money is made in trend trading because that's where the biggest hits come, because you can see how you can trend for an extended period of time before reversals kick in. Okay, and you can be actually long for very long periods of time, or short for very long periods of time, as long as markets tell you. So if you have some interest and you'd like to become a member with me, okay, then I will show you how you can do so. And that is, if you want to day trade futures, okay, with our group using our algorithm, all executions are done by CTG, so you have to open an account with them. You have no overnight risk. All trades are determined by a proprietary algorithm. Nobody's making the decision. The algorithm is making the decision. Okay. No emotions. The first 50 people, $99 a month or $1,000 annually. Okay, that's bubbatrading.com/dream. If you want to convert after a month to an annual, you can do it anytime you want. Okay, I have no problem with people that want to convert. Okay, but again, if you have questions, I'm happy to answer any question that you have. It'll be my pleasure to go through anything you want. If you have any questions, I know I went a little fast, but I usually go much longer, but I always have trouble gauging my time. Okay, so, but certainly I always have time for questions. And, you know, those who don't know me, my name is Todd Horwitz, Todd Bubba Horwitz, and I've done this, I've been a professional trader. It's the only thing I've done since 1980, okay, is traded every day, okay, and only is over the last 10 years did I become an educator. So if you have any questions, otherwise go to bubbatrading.com/dream, and you will get today's special. It's normally $199 and $2,000. Okay, so you have a chance today for the first 50 to take advantage of our program, and would love to see you as a member. And if not, and you have questions, you can always email me at bubba@bubbatrading.com. I'm happy to answer any question that you have. And you know, again, I've done a little quicker than I thought, but it's hard for me to gauge time, and I probably talked a little bit too fast, but what can I tell you? Okay, here's a question. Let me see what it says here. Do you trade every type of future? We trade, here's the markets we trade. Good question. See, if I would have been paying attention, I'd have given you the market. We trade the Dow, S&P, NASDAQ, Russell, crude oil, gold, euro currency, Australian dollar, Canadian dollar. We trade those 10 markets. That's it. Okay. Now we could add markets, but again, the biggest thing for us is they have to be liquid enough to trade, okay, and active enough. But those are the markets we trade. Canadians can, yes, sign up 100%. Okay. You can trade in an IRA. You can actually trade in a regular IRA as well. Okay. CTG has a regular IRA as well. So either a Roth or regular. Okay. And basically we're worldwide. Okay. We have automated trading worldwide. The hardest part is always the Canadians, because they always get screwed, but we do have for Canadians as well. And you know, we've got a lot of good things for Canadian down the pipe as well. But again, it's a model that is really meant to take you out, okay, of the loop where you don't get emotional. Okay, that's always the biggest concern for everybody, is always that they get emotional when they're trading. okay, and they get emotional when they're making decisions. So listen. I do it for myself, okay, and I give you my schedule. I mean, I day trade with members every day that are members of my futures courses. Okay, at between 8. In fact, I just finished before we got here. I traded with them from 10 till like 10:35. Okay, this morning. Okay, and that's a class that people take a class and they become futures, and we trade. We'll be trading the jobs number tomorrow. But the point is that we trade for 45 minutes, and then and then the rest of the day is spent with the algorithm. But I do, I trade 4-minute scales. Here, I'll show you what I do. You get an idea for what I do here. I gotta drag this over because I'm confused. Okay, here's what I use. 4 minutes and what happened? Where my one? Hold on. I guess I got to drag them both. There we go. I got a 4 and a 1. So we're using a 4-minute to decide, and we're using similar to what the algorithm does, except that I have to make this decision manually because I could not. The algorithm I can't be as fast as the algorithm. Okay. But again, I understand we're looking for one pattern, and interestingly enough, you can see all these marks right here. Okay, just for those who have any interest, if I can get this to come down, we actually made this trade and we actually shorted the S&P up here, and we actually covered it way down here. That was a real trade. You can see it. When I mark them like that, it was a trade that we actually made, and we actually bought the Russell right down here and sold it way up here. But anyway, again, they don't all win, and they're not all winners. And I don't ever want anybody to think that every trade is a winner, because every trade is not a winner. Okay, you're going to have a drawdown. It's as automatic as you can say there are drawdowns. Okay, and anybody who tells you different is a liar. Okay, that's all. It's that simple. Okay? There's no way to avoid losing periods because we're going to hit between 66 and 70%. Okay. It's that simple. Okay. But there's going to be periods, which is why the discipline about your money is so important, about the size that you're trading, but you can never outsize yourself into the market. Okay. Okay. Well, I know I'm done way early, Anna, but I guess you'll have a little extra time unless people have questions or you want me to talk for a little longer. I can do whatever you want.
Todd, can you please double check the link you gave us? On my side, not really working.
/dream?
Yeah.
Yeah, that's correct. It should be correct. I'll type it in myself and see. Hold on. I don't know. It's funny, but not funny because if there's a problem, it's going to always piss me off and I have to yell at somebody. But hold on. But I thought it worked earlier, but I will check it myself right now. Okay. Okay. Yeah, it works. Here it is. I'll just drag it right over. There you go. BubbaTrading.com/dream. And there's a link.
Okay, great. I just got a few questions into my chat about the link.
BubbaTrading.com/dream was the link, and I thought it worked. I mean, there's been a time that it hasn't, but I thought it worked, and we're in good shape. And again, look, I'm on your team. I want everybody to do well, but I do warn. Listen, I always warn everybody that this business, no matter where you're at, no matter whether you come with me or not, okay, wherever you go, remember that you have drawdowns. Drawdowns are part of the industry. They are not avoided no matter how good you are, okay? No matter what you think you know, you can never avoid the drawdown, the inevitable drawdown that is going to come because markets don't always work exactly to plan, okay? Just remember that. Again, whether it's with me or whatever you do, I like to educate traders. That's my thing, okay? I love to coach. I'm a miserable coach. I'm mean, and I yell at everybody all the time. But at the end of the day, I want you to do well, okay? And whether you do it with me or you do it with somebody else, I don't care. I'm 65 years old. I could quit working anytime I want, okay? But I happen to like what I do, and I enjoy what I do. So I'm all good with helping and teaching, and that's why I'm doing this. Otherwise, I would just trade for myself, because I'm certainly done that for 44 years. So I'm happy to help you. Dear Bubba, So we're simply paying, you're paying for the algorithms and the execution, okay, which will be a commission, okay, which will be, reasonable to the market, to what auto execution is, okay. The account is Capital Trading Group, okay. You can send me, if you become a member, I will send you their information, but you can look them up. Certainly, if you want to look them up now, you go to info.capitaltradinggroup.com/Bubba. That's info.capitaltradinggroup.com/Bubba. Okay. Do you offer swing trading options? I do, but that's not here. But yes, I do. You can certainly, if you have other questions, I will be happy to share. Okay. We run the same models with synthetic stock or options we create with options. We have long-term futures portfolios as well. Okay. We have long-term options portfolio. We do everything. I mean, everything, but basically I have moved everything into full automation. Okay. The only manual trading that I still do is the day trading that I do from 9:30 or 9:45 till 10:15, 10:30 with my members every day. Other than that, everything else is automated. Okay. I try to, I try to make everything easy and simple. Okay. And I believe that that's just the best way to be. I'm a big fan of simple and easy. So that's what I do. When I take the subscription, what are the next steps? Well, I will know, and then you will get an email from me, okay? And you will get the information of how you go about getting the CTG. They will get a copy and they will reach out to you. You'll all be set up quickly, promptly, and ready to go, okay? There's no problem, and if there is any problems, you let me know. But typically, I've never had problems, but I will certainly take care of them immediately. And just so you understand, I am the customer service rep. I am everything. I'm the teacher. I'm the I send out the trades. I send out updates. Okay, and I answer the questions. Okay, so let's see. What size account do you need? Well, you can go. We'd like 20 is to trade the big ones, but you can go less if you want to use the micros. We're going to do both. Okay. Where does one that I answered? Okay. Okay, hold on. There's a bunch of others coming in. The link is bubbatrading.com/dream. Right there, bubbatrading.com/dream. What platform do I use? I use Cunningham. Okay. I've used it for 22 years. Okay, so I'm too stubborn to change, but they're all good. I mean, it just depends on what you're comfortable with. When I take this, what are next steps to take, and how do I will take, again, I'll send you all the information you need. So all 250 days, we are trading, trying to make money. Okay, we're not going to make money all 150, actually it's 241 days, but we're not going to make money every day. Okay. Bubba sounds like that coach that will drop you on site. Listen, I get mad because I work hard and I teach hard and I want people to learn. And it's very frustrating when people don't take the time to learn what we do. Now, again, this doesn't take any learning, but I do a lot of teaching as well. And I'm very, I have a high school program for financial literacy that I donate to high schools. So, and I've written a couple of books on options. So, but I am a mean cuss, as they say. that I'll tell you, I am a mean cuss because again, I want you to get it. That's what it's about. Okay. So, any other questions? Feel free. Otherwise, I'll turn it over to Anna and say thank you all very much. And if you need me, just reach out to me, bubbatrading.com. I'm happy to answer any questions you might have if you think of some more later. Do I accept crypto? I don't. I would, but again, you'd have to talk to them. But I doubt that they accept crypto yet. Okay, that is my thing. I like crypto. I'm a believer. We actually trade the Bitcoin micros in not in this model. It's not liquid enough yet, but in our longer term model. And on Monday, the Ethereum micro gets announced. Okay, so it'd be interesting. Be something to to think about. But again, when anything becomes liquid, especially like Bitcoin, we would trade it. Okay, but it is not quite liquid enough yet for our taste because it's too wide and the bid offer spreads are too wide for the moment. Now again, it will tighten up and we'll be happy to trade it. Okay. The minimum account size can be, again, if you assume on a big contract that's 20,000, okay, you can open an account with 5 or 10,000 to do the micros. Okay, so we're gonna base everything on the big contract, but the micros are 1/10 the size. But the minimum account's got to be 5,000. Okay. So I hope that answers your question. Okay. And then, of course, obviously, our goal and objectives are to add and press up as we make money. Okay. We don't want to obviously press up on bringing in new money. We want to press up on money that we have earned, go into a small drawdown, and find the appropriate mathematical point to press and add to our trades. Okay. So with that, I will say thank you very much and a pleasure. And again, if you need me, feel free to reach out. I'm always happy to help. Whether you're a member or not, you can still ask me questions. I'm not gonna be mad. You can certainly reach out to me. Okay, I answer questions all the time. And I do a daily video update of what's happening in the markets every morning at about 10:30. Okay, and you certainly will get that as well. So Anna.
Everybody, how's everybody doing? And thank you all for being here. I actually want to know, where are you guys from? So let me know in the chat box, where are you guys coming to me from? I know that Anna is in the Ukraine. So where are you guys coming from? I'd love to see an international crowd. Arizona, the Gold Canyon, nice. Indianapolis, Southern California, Vancouver, the UK. Which part of the UK? Chattanooga, Tennessee, Charlotte, nice, Texas. I love seeing people from all over the place. Whom else? London, Nambia, nice. And Dennis is also from the UK, so we have quite a few people here from the UK. Mexico, nice, Roberto. Which part of Mexico? Pittsburgh. We were just in Pittsburgh, actually right before the COVID struck, so I shouldn't say just, yeah. DC, beautiful. My brother lives in the DC area. He lives in Arlington. I love it there. All right, guys, are you ready to start? So I am going to be presenting to you guys today, obviously, but my main goal is that you come out feeling like you really learned something and that you could really apply it to your trading, all right? And the best way for that to actually happen is for you to ask me questions. I love questions. I will answer every single one of them. But the more questions you ask me, the more you can come out of it, right? I always say day trading is not a spectator sport, right? It is a activity that you have to be fully immersed and into. So please let me know any questions that come up during the presentation or in general, and I'm happy to answer them all. So let's begin. This is me, Marina, the Trader Chick. And I have a question for all of you guys. First of all, I'm sure the majority of you have all heard of Cirque du Soleil, but I want to know how many of you guys actually really like Cirque du Soleil. Like, I have to admit, I am a total over-the-top fan. I know that they have gone out of business during the pandemic, but before the pandemic, I used to take my sons all the time. I mean, it's not, I always said it's not something you go and see, it's an actual experience, right? So one thing I did notice though, when I went to Cirque du Soleil, I mean, it's an experience, right? It's one of the most incredible things. And I recommend that you guys watch it if you can. But one thing that I recognize is we watch these performers and they are just phenomenal, right? But then if you really think about it, they are literally ordinary humans that are doing extraordinary things, right? And that's what makes it so magnificent, right? But what it is that it literally is just an ordinary person that became extraordinary. And what does it take for an ordinary person to become extraordinary? And it's the exact same thing when we talk about successful day traders, because we all aspire, right? The goal of us sitting here right now is how can we become a pro successful day trader, right? And sometimes it feels so out of the way. But here it is. Like, I really examined the Cirque du Soleil because I'm just so fascinated with them. And then I started to really understand what is behind them. And it's easy with them for us to see and think, wow, they're extraordinary. And then for the day trading, those the same thing. So what does it take to become extraordinary or successful? Well, number one, we all know that these performers are completely committed, right? We know when we're staring at these performers that they have put in years of training to perfect their mastery, right? You know that they did not wake up yesterday and say, you know what, I want to be a Cirque du Soleil performer. And next thing you see them, doing acrobatics 50 feet off the ground. You know that they have put in the commitment, the years of training, their intense focus. Could you imagine if they are doing 2 or 3 different things, talking on the phone, maybe reading, an article, scrolling on their phone while they are up in the air doing these acrobatics? No, they are intensely focused and completely in the moment. The discipline, no matter what, they show up day in and day out, and they practice and they hone their craft. They don't waver because they're not in the mood or they're half there, because that will totally take away from what they're doing. The other thing, it's really, really important, something that I recognized was their trust. Have you guys ever thought of that word, trust? So these performers have complete and total trust, not only in themselves, and that happens, that trust in themselves is defined through the commitment that they put in, but also in their partners, right? They are doing life-defying things in crazy circumstances. They have to have complete trust in their partners, and their partners have the same exact trust in them. In their routine, they know their routine, they have that strategy, but also they have complete and total trust in their equipment. I can guarantee that probably more than 50% of you guys right now are not fully trusting several things. One, yourself. A lot of times we doubt ourselves when we are in the markets, right? Another thing is our strategy, the routine. I can guarantee that more than half of people here today don't probably even have a defined strategy that they could do with their eyes closed. And most importantly, no, that's not most importantly. Most importantly is the strategy, but equally importantly is the equipment. What is the equipment of a day trader? It's our platform. It's our feed. It's our broker, right? How many times do I get people that say that, you know what, I'm not really sure how to use my platform, yet they are live trying with real money to figure it out and losing because sometimes they're putting in a sell when they wanted to put in a buy. They don't have that trust in their equipment, right? That right away, what is that going to do? The last important thing, it's going to completely drain your confidence, right? When you're messing around losing money, it's your confidence starts to go away. These guys, the performers, they do not have an inkling of it. Why? Because they have been practicing. They have all of the other components in place. All we need to do to become successful is these components. And these components are not hard because a lot of people sitting here, that's what they want to do. They want to earn a lot of money through trading, but the majority of people are not committed enough, disciplined enough, trusting enough, and many more things, right? So once you do that shift, everything will change. This woman did not wake up yesterday and say, you know what? I think I want to be a Cirque du Soleil trader, performer. And oh wait, who are these guys? Yeah, you know what? I'm just going to give it a shot. Let's see. While I'm 60 feet up in the air, I'm going to try these weird tricks. People do not realize that your life, your hard-earned money, you have to put in the time to understand how to be able to make it work, right? That is what it's about. And today, what I want to talk about is what the similarities are. And we do not have to have huge similarities, but it's because there's so much going on, right? So the thing is, we hear that only 5% of the traders are successful. right? Why is it 95% aren't? Because of everything that I just mentioned. The majority of people, there is no barrier to entry for day trading or financial markets. As long as you have some money, anybody could get in, right? And then 95%, to be honest, I think it's even more, lose. Why? Because they don't know a strategy. They don't understand what's going on. They maybe heard somebody say something. But if you think of yourself as a performer, right? Would you do what that woman was doing that same day? No, it takes time. It takes practice, right? So a lot of these people, they lack what Cirque du Soleil people have. So what is it that we could do differently? Since I cannot go over everything, I am going to focus on the most basic, simplest things that I can guarantee right now. And you could write me to my email and tell me, you know what, Marina, this did not work for me, but I can guarantee just what we're going to learn today, it is going to completely up level your trading to a new level. That I can guarantee. So what are we going to be talking about today? Trends, 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 trends. Okay, what are trends? They are literally like the tightropes of the markets. Okay, if you do not know what trends are, you cannot do anything, right? So we're going to learn about the trends. We're going to understand how to spot those trends, how to stay away from sideways trends, and how to apply them for high probability trade setups. Before I go any further, I have a free worksheet for you guys to go with this presentation. You could download it right now, makingofadaytrader.com. And I know that Anna is going to be sending out the replays. So once you have this free worksheet, you could go along with the presentation because they go hand in hand. And I can guarantee that it will take your trading to the next level. And you can prove me wrong. I have yet heard anybody show me the other way. So get your free cheat worksheet right now, makingofadaytrader.com. And let's begin. All right, makingofadaytrader.com. So before we do jump into the presentation, I want to first do a formal intro, or informal, I should say. Like I said, this is me, Marina, the Trader Chick, and I'm actually coming to you guys from Antigua, Guatemala. I am an expat. I've been living in Antigua for over 12 years. These are my two little people. Well, they're not very little anymore. Before I became a day trader, I was a fitness instructor and a travel writer. And the main reason I bring this up is because I get so many people thinking that they have to be financial backgrounds or math whizzes or engineers or something, you know, mathematical and with numbers. Totally not so, right? And the other thing is that I'm a travel writer, and I was, and I still am a travel writer. And the main reason why I bring that up is because travel for me is not a luxury. It is a necessity. And day trading allows me to be able to do all of that. And that's the coolest thing about day trading. Also, the other thing I like to bring up is that I am trilingual. And the main reason why I bring this up, not because, oh, how cool is this? It's because what I recognize, like I was a Soviet Union refugee. I moved to the United States when I was really small. So Russian is my main language, but English is Russian is my mother language, but English is my main language, right? But I learned Spanish in my later years. I learned it when I was 28 years old. And when you're learning as a kid, you don't really learn. It just becomes like, within 3 months, I was fluent in English. But when I was learning Spanish in my later years, it took time. And there's this whole process behind learning how to speak a new language, right? You have to process every word, translate it, then, speak it, and the person in front of you, you're hoping that they're patient enough and they work with you. And it's a commitment, right? That's part of that commitment. You have to practice daily until one day you wake up and boom, you just speak the language. And one thing I recognize after years of struggling in the market and not really learning, what is really going on, just kind of following what other people were saying, I realized that the market has a language. And when I started to look at it as another language, everything changed for me. I was able to listen to it and it actually speaks to you. And once you understand what your charts are saying to you, you will have an entirely different perspective and you will start to become a successful, consistent trader. Okay. And like I said, day trading, you can work from anywhere. And that is the coolest thing. So really, really works well with our travel lifestyle, because even though we're expats living in Guatemala, we normally tend to travel 2 to 3 months out of the year. So I don't want to stop while I'm traveling. And I only have one chart my laptop. That's all I use. And I used to be on, I still am on quite a lot of different presentations and summits. And I used to do a lot of in-person before COVID, obviously, like the Money Show, Traders Expo, and all of those. So remember, guys, get your free worksheet. We're about to jump into this presentation, makingofadaytrader.com, makingofadaytrader.com. Ready? So every performer in Cirque du Soleil, they start with the basics, right? This is how you grow. They don't just jump in and start doing insane tricks on a tightrope 50 feet off the ground, right? They start with the basics. Once they master those basics, then they could add on and become more creative and add on more routines, right? But it all starts here. This guy is not going to be doing flips and insane stuff, you know, hanging in the air. His feet are going to be touching the ground while he learns the moves, correct? And a lot of times, and I know for a fact because I've spent over $20,000 on my own day trading education, I have to say that pretty much every academy, chat room, everything was literally, you're thrown in and you never understand, you never go through the basics. I give it the metaphor as we are putting in windows without ever having built in the walls, and the windows just keep on crashing, right? That's how it is. That's how I was being taught. And I realized whenever I asked basic questions in chat rooms or wherever with mentors, I was always treated like, you know, I'm either supposed to be born with that information or completely ignored altogether. So I want us to go, and because once you have these 4 basic strategies, like I said, you can write me and prove me wrong that it's not going to help you, but I can guarantee you it's going to completely up-level your game. Friends, trends. All right, look, guys, trends are like the tightrope, right? Once a tightrope walker learns how to walk, that's when they could start doing flips and 1-foot ups and doing all these really incredible things, right? Even stuff like this. Could you imagine doing something like this until you know how to actually begin the basics? And probably what they did were maybe 1 foot off the ground, probably not even, and they were just taking tiny steps before they started riding bikes with a guy on a chair, right? So let's hop in. Look, we all know logistically that there are three trends, right? We know that there is an upward trend, we know that there's a downward trend, and we kind of know that there's a sideways trend, but we really don't pay that much attention to it. But the reality is that sideways trend, that is where 90% of our winnings gets taken away, or even more, right? This is where we lose pretty much almost everything in the sideways trend, because I call it the trader's worst enemy. So what is an upward trend? I'm just going to go over really basic stuff, but it's amazing that people don't even understand these basic things. What is an upward trend? It's literally where each pivot is higher than the next. This is where you will be looking for going long, for buying. What does that mean? You enter at a low price, exit at a high price, right? What is a downward trend? It's the opposite. It's when each pivot is lower than the other pivot. And we're going for a short. We're selling here. We're entering at a higher price point, exiting at a lower price point, and taking the profit in between. And if you're sitting here thinking, well, I never short, well, then you're not a trader. Because day traders, we don't care if the market is going up or if the market is going down, because it's all about technical analysis. It's all about what is the market telling us? Where am I going to profit? How? And you will be probably making more money from the selling and the shorting than you would from the buying and going long. Okay. Now, I personally trade the E-mini futures. That's all I trade. That's why I only have one chart, and I go for very short periods. I'm a scalper, right? So because I'm a scalper, I also have mini trends that I love and I could monetize on. And usually you have like the overall momentum, right, going in one direction, and then you will have a deep retracement or a correction that might not last and then continue in the same direction, but you can monetize on that mini trend if you recognize it, right? And that's the beauty of trends. Now, let's break down those trends entirely, because once you can understand the trends even better, that's when you can really, really monetize with them. Now, what did I say about sideways trends? You could call it consolidation areas, transition areas, exhaustion patterns, indecision areas, the chop. I don't care what you call it. It doesn't matter. What it is a place where there's total indecision and no momentum, and it's a place that you want to stay away from. And I call it the trader's worst enemy. Excuse me. Okay, this is what a consolidation area looks like, a slowdown. This is an area where you don't know what's going to happen. Do you want to be putting in your money in a place where you really don't know what's going to do? Because what you're thinking, a lot of people, especially amateur traders or amateur people entering the market, is that they're going to predict the market or beat the market. Let me tell you, that will never, ever happen. We are individual retail traders. We will never, ever have any power in moving the market in any direction. What we do have power in is listening to the market and working with the market. And when you're seeing these areas, consolidation areas, sideways markets, whatever you want to call it, a channeling market, you stay out. Does this look like a place where it gives you any real direction? I mean, look at this, back and forth, right? No. You do not want to be putting in your money just because you think you have to. Look, day trading is an incredibly emotional roller coaster. We know that, right? So every time I talk to traders for a little bit more advanced than the total beginners who are just, losing, or what I say, donating money to the markets left and right, they start to come up with stories. And it's a very emotional thing, right? Because they don't have that strategy, that foundation, those habits and rituals to fall back on yet, right? So what is going on? What is trading besides being emotional? Why is it emotional? What is emotional trading? It's stories, right? We tell ourselves stories besides the fact that we chase trades and revenge trading, which could be completely avoided. We also tell ourselves stories. And why do we end up losing so much money in a sideways trend? This is the number one reason. There are only two types of traders in the market. I don't care what you're trading in the world, there's two. One is the trader that is a trend is your friend kind of a trader, right? So when they see, the market heading in one direction, all of a sudden it's, sideways, they're going to be telling themselves a story. You know what? The market's been going up all day. I'm going long because it's going to continue, right? It's a story. Because they think the trend is just going to continue. Then you have the second kind of a trader, which is the contrarian trader, right? So they would see the same thing and be like, you know what? The market's been going up too much. It's going to correct. I got to go. I'm going short. So what are those two? Both stories. They're lies. They are completely useless because the market is going to do what the market is going to do. But what is the most important part of a job of the trader? We either do three things. We either know when to get into a trade because we have a solid setup. We know when to get out of a trade because we're managing it correctly. And three, and the least utilized one of all, is knowing when to stay out of a trade entirely. Knowing when to stay out of the market. You have to understand that. The thing is, a lot of day traders a lot of amateur believe that they have to be in and out, in and out, in and out all day. It's called trigger happiness, right? It's completely ridiculous, and that's when it's completely unsustainable. You lose all your money no matter what. So when we see these areas, what do? We stay out entirely. And you could see them happening quite a lot. Like I said to you before, I am a scalper, so I go for quick profits, smaller profits. So if I'm seeing this and the market's going down and I want to keep on going short, boom, I would be totally stopped out. But I wait until I have that confirmation and the market talks to you and shows you when that confirmation happens. Okay, this is what these areas look like. Do you really want to be in a place where there's no movement? Look at that ugliness. It's ugly. But in a trend, it moves, it flows, right? And that's what we want to be in. But how do you know these areas? How are you even able to recognize them? So look, the market respects areas and we need to respect what the market respects. So what are areas? What are these areas? They are supports and resistance areas. If you guys are unfamiliar with these two areas and you are live in the market, stop right now because you're just going to be donating your money to the market. I like to think of support and resistance areas like a safety belt, right? Like for instance, Formula One drivers, it is a known fact amongst the drivers that during racing season, 25% of them will either have an accident or a fatality. Like it's serious stuff, right? So when they hop in their car, will they ever hop in their car without a helmet, without a fireproof uniform, without a seatbelt? Absolutely not. Yet traders, people who have some money and want to call themselves traders, hop into the market, never putting any safety belts on. And then they lose. And then they're like, oh no, it's so risky. It's a gamble. No, it's because you want the quick rich scheme and it doesn't happen. If everybody could do it, then we'd all be millionaires, right? So there's a formula, there's a strategy. Now, how do you protect yourself? You can start with support and resistance areas. I call them our safety belts. Why? Because what is a support area? So the market is going down and all of a sudden it starts to be hitting it over and over and over again in the same place. It's the floor of the market, right? So do you want to be going in even though the market is saying to you, you know what, I've already hit it 3 or more times, give it a break until it breaks or it changes direction and then go into the market. But you see people going into these areas all the time thinking that they're going to predict what the market is doing and just losing. And not only are they losing money, they're losing emotional capital. They're losing their financial, their confidence. That's what's happening. Okay, so when you see this back and forth, you know, with these areas hit over and over again, look at this ugliness. Do you really want to pretend to understand what's going on there? No, why? Just put in your areas. What is a resistance area? It is the ceiling of the market. It is where the market is hitting it over and over and over again, and the market respects areas so it can re-hit it again. But you need to have this in. You cannot put in a fake seatbelt, right? You cannot put in a mental seatbelt and think when during a crash, you're going to be able to just save yourself. You have to have these areas drawn in. And every platform, pretty much any good platform, and you need a good charting platform. I'm not talking about algorithms and softwares and indicators. I'm talking about the actual platform. It's literally, you cannot be a Formula One driver in a minivan, right? You go and get the appropriate vehicle. And then once you have the vehicle, then you could add on the other features. But without the proper vehicle, you can't. You need the proper vehicle, and that will be your platform. And good, strong platforms, they will give you free universal indicators and drawing tools where you could draw in these areas, and you don't need anything fancy. You could put in a line as long as you're seeing it there and knowing that it's there. It's not a mental thing, right? This is what a resistance area is, and all together. Now, the real question is, the real understanding is, how can you begin to spot it in the beginning? How do you know when a sideways trend or when a consolidation area is starting to happen so that you can stay out of it? And that is reversal areas and divergences. I call them the trader's map to shift in direction and trend. These are my golden signs, right? I live for reversal patterns, and those are double tops, triple tops, head and shoulders. They are free. They could be used on any platform as long as you're using the correct price action and any instrument that you are trading. So what are they? So double bottoms, triple bottoms, double tops, triple tops, they're really easy to spot, right? You've got, when it just hits this areas, this is the beginning, right? When I see a reversal pattern, I'm already staying out of the market. Why? Because the market is telling me, stop. I'm about to do something. Is it going to reverse 100%? No, but there is a higher potential that it will reverse, or it is going to go into a flat zone. So do I want to risk my money where it is a higher probability of it being flat or reversing rather than me continuing? No, I do not want to be putting any of my hard-earned money into that market, right? You should not either. So reversal patterns, they're so easy to spot. Now, This is my chart. I do not use anything else. I use two indicators. I use EMA lines and I use the MACDs, right? And why do I use the MACDs? I love the MACDs. They are my favorite indicator because I find them to be the least lagging indicator of all, right? Versus some of the indicators out there, they are really lagging. So you're not completely on board. Now, how do I use my MACDs? With, I see their strength and also with divergences. So when I'm seeing a reversal pattern and there's already a divergence, I am totally out of the market because the market is screaming, Marina, stay out. I'm not sure what I'm going to do. You don't want to be putting your money in. It's like this huge red traffic light, right? Telling me to stop. So here it is again. However, I personally use divergence even before reversal pattern happens. For instance, here we're heading down, right? It's totally inclined, yet my MACDs are already telling me it's slowing down. So I'm already out of the market. I'm very conservative because smaller profits daily lead to big profits yearly. If you're going to be aggressive and think that you're going to outsmart the market, you might have a couple aggressive wins, but you will be losing even more later on. And that's a fact, okay? So this is how I use it. I like to already see where my divergence happens. I'm already sitting out because I know that the market is about to do something and I need to stay out of that market. Now, with all that said, let's apply this pretty much to a type of trade. There are many obviously different types of trades, but pretty much we are all on board that the breakout trade is one of the most powerful trades out there, right? However, if you do not have your area set up, if you do not understand what's going on, you are going to miss the entire trade, right? You're going to miss it. And then you're going to be chasing the trades and you're going to miss those trades and you're going to go into the revenge trading and it becomes this, you know, kind of snowball effect of emotional disasters, right? So how do we spot a valid breakout trade? So here is a great example of what a breakout trade looks like. We have a massive resistance area and then it breaks out. So let me just give you a little, hang on just a second, a little understanding what is a breakout trade. So layman's terms, you live right here, you live south, right? And all of a sudden your best buddy calls you up and they're like, hey, I'm having a barbecue. Come on over. You've been to their house a gazillion times. You hop in the car and you get on the highway and you're revving it up. You're all full of energy and confidence, excuse me. And you're driving and all of a sudden there's this huge construction site and a huge detour, right? And the construction worker is like, you gotta go east, you gotta go right. And what happens to you when you are on a detour? I don't know what happens to you, but for me, I am in total freak out mode, right? Oh my gosh, what if they don't continue with the signs? Waze and Google Maps have not updated yet. What if I don't know where I'm going? What if I get lost? There's all these what ifs. What is a what if? It's doubt. It's uncertainty, right? It's that sideways market. It's that sideways trend. You're totally confused. You don't know what's going on. Do you really want to be putting money in there while you're in the detour zone? No. But all of a sudden you come to an area and the construction worker is like, okay, guys, the road is fixed. You can get back on the highway. What do? You're back on a place where you know total certainty and you zoom. That is the breakout trade. Okay, that is what the breakout trade is. But if you don't know when you're in the detour in uncertainty area, you're going to miss the actual opening and when you could go for it. All right, so we're going to be putting it all together. Again, make sure you get makingofadaytrader.com, makingofadaytrader.com. All of this is in that cheat sheet. Okay, so let's look at this again. We are going up, boom, we have a massive resistance area. Look at that. It's hit 1, 2, 3, 4, 5, 6 times and it breaks out. Okay, this is what they look like. We want to be ready for those breakouts, but you could only be ready for them if you have it really drawn in, not your mental seatbelt, right? So how do I personally take these trades? So I have my area drawn out. I read my MACDs because it's totally flat. The MACDs here, you know, they're at 0. This dash line is 0. It's totally flat. And then all of a sudden, boom, it breaks out. It gives me massive confirmation. Now, I use my EMA lines, which are these exponential moving averages. I use 3 of them. This is where I take my trades from. I tell the market where I want to enter. I never just like, wait, this looks like a big candlestick. I'm going to go in. No, because that's an amateur move. You do not ever enter a market entry. You put in an order waiting, a limit order, right? And once you're in, you also put in a profit target and a risk management stop. You cannot have mental stops or mental profits targets. Why? If you put in a mental stop, your ego will always win. It will always tell you, no, the market is going to continue in your direction. Just go a little bit more, and you end up losing your entire account. And what happens when you don't have a profit target? Again, you're not a pro when you don't have that in. But why? Why is a profit target as important as a risk? Because we will always lose to our ego. What happens? The market is going in your direction. You see it, and then you either never had a profit target in place or you remove yours. And guess what? Greed wins over. Your target is hit, but you removed it, and then it turns on you and stops you out. You're a pro. You need to be telling the market where you want to enter and when you want to exit. You never want to just go in or out market because you'll lose money. Okay, super important. Now, before I go into the live market, I want to do one other super important tip. Because when I ask people, what do you trade? I get like a whole volume. I trade Forex, I trade futures, I trade stocks. So and then I say, so are you doing well in any of them? No, not really. Why? Because let's take something from the Cirque du Soleil performers. They dominate one area. This woman is not going to hop on a motorcycle and start to do different tricks because that's not her mastery, right? Her mastery is getting into this acrobatic position, right? So the guy on the motorcycle is not going to be doing what she just did. Aspiring traders think that they could trade multiple instruments and make more money and end up losing more money. You need to dominate one. I don't care which one it is, but you need to dominate that one. And once you dominate or master that one, then consider going on to the next. Right? You cannot be driving 3 different vehicles at the same time on 3 different roads. It will never happen. And many people do that and think that they could outsmart the market, and they don't. The best traders are the ones that master each one at a time. And then you can go on to another. Okay, so remember, everything is makingofadaytrader.com. And now we are going to go into the live market. Hang on just a second. Okay, so I have a question about my setup for the MACDs. I will be showing that to you guys right now. Oops, where am I here? Okay, so these are my charts, right? The volatility, by the way, has been unbelievable. It's just been absolutely gorgeous. So here is my chart. Like I said before, I only trade the E-minis, and you can see here the ES. So I also do not trade a time chart. I trade a tick chart. What is the tick chart? So you can see here, each candle has ticks right here, right? I do 610 ticks. That means in real time, I am seeing how many transactions are being done in real time per bar. Each bar gives me 610 transactions. Because I like to simplify and keep my charts clean, I don't need a volume indicator. Volume indicators, they are lagging. They're not really great, right? So that's why I use the tick counters, because I could see how much is going on, what is going on. And as you can see here, we started doing really, really beautifully going up, right? We're heading up, and then look at this. Beautiful right here. I would have been in this trade right here, right after this move began. And then what happened? We're starting to get divergence, right? So at this point, I'm looking to see what is going to happen, and probably it's going to totally slow down and most likely start to give me a little bit of a sideways movement where I do not want to be part of. So I like to see the confirmation, break in divergence, or completely break in the area altogether. Okay, so here is a consolidation area right here that I would be looking into completely. And this would be my breakout trade. Boom, look at that gorgeous move right there. I'm already sitting waiting for it. My MACDs are beautiful, and it gave me a beautiful trade up. You want to have confirmation. It's not about the 8,000 trades you take. It's about the good trades. Think of yourself as a big game hunter. They go for the big game. They don't go for every tiny little insect and little rabbit that crosses their path. Okay? So this is what my charts look like. And let me give you quickly a look at, oh, there we go. Okay, so my MACDs, I use universal MACDs, 12, 26, 9. And because MACDs come in 3, the MACD, the average, and the difference, I only use the MACDs. I do not use the average and the difference. They are just white noise for me. Okay, so guys, the reality is we have everything we need to take action, right? We've got these presentations, the summits, books, YouTube channels, whatever you need for self-educating, right? But the reality is, how do you know if you are doing it right? How do you know if you're doing it right, right? Like all of this is great, but the real question at the end of the day is, how do I get truly started? How do I really do this? And this isn't only beginners. This is seasoned traders who are still not consistent with making money. They ask me, how do I turn this around to be profitable and consistent? And a lot of times it's because they don't have the basics, those trends, the understanding where to stay out, how to stay out of the sideways market. That is the basics, right? You cannot get into a car and be like, okay, go, without understanding that here's the gear shift. I have to shift it by pressing on the clutch. But you know, all of these are new things, but they are technically basics of a car, right? If you don't know where the clutch is, where the accelerator is, where the brake is, where the gear shift is, even if you're an automatic, you still have to put from, you know, park into drive into neutral, and sometimes you have to go into a lower gear. These are the basics. Or the horn, because if a car is going to cross in front of you and you don't know how to tell them, hey, I'm here, this is it. And even more so, if somebody has never been in a car, gets in and they're like, okay, a person's like, all right, put on your seatbelt for safety, and you have no idea where the safety is. The basics, how are you going to be able to protect yourself, right? And that's the same thing with day trading. It's those are basics, right? And I earlier mentioned, I literally spent over $20,000 on all sorts of mentorships, one-on-ones, retreats, conferences, summits, you name it. I've spent it, and I was still consistently losing money because I was never taught the basics, the understanding, those little things that have completely revolutionized my trading. And because of that, because I was following other people's, oh, wait, there's a good trade right there, without understanding why it was a trade, I ended up losing money all the time until I literally ended up losing almost $4,000 in 5 minutes. It was one of the worst moments of my life there because I've been already struggling for 2 years. And after that, I ended up quitting. I just quit. But here's the reality, and I can guarantee the majority of people sitting in this room are going through the same thing, is we get bit by the trading bug, right? And it never really stops itching. And why is that? Because deep down inside, we know that we can do this. We know that we can do this. So I came back after 4 months of staying away, and I went back to the basics. So there's a really great coach. He is not a lot around anymore, but he's probably one of like those virtual mentors for me, Coach John Wooden. I don't know if you guys have ever heard of him. He is a legendary basketball coach, and his entire method is, when in doubt, go back to the basics. I mean, this guy has won 88 championships, 10 NCAAs, you name it, he has done it all, right? And he has worked with the greatest basketball stars of all time. Yet, every time they begin their season after winning an NCAA and championships, they go back to the basics. He goes over with them how to tie their shoelace, how to roll up their socks, how to dribble the ball. Why? Because it doesn't matter how great you think you are, if you're on the court and your shoe falls off or you get a blister, guess what? You're sitting out. You are not going to be able to apply anything that you just think you know because you haven't gotten the basics, right? So today, for my special offer for participants only for the people that are here right now with me, I am offering my introductory course, Bootcamp for Day Trading. You can do this on any apparatus, laptop, desktop, tablets, iPhones, Android. This is the next step. Either it's your first step or it is your next step, but this is the step. What you get in this course, everything to start you off with your day trading, right? Understanding. Remember how I said trust your equipment? If you do not know how to use your platform, how are you going to be able to do it well? So there's a free 30-minute pro platform tutorial set up right there. It does not matter which platforms you're using, so that you do not have to worry about it and you can just start using it automatically, so that you fully have confidence and trust in it. You don't have to worry about that. Dissecting these trends, understanding market trends, sideways trends, downward trends, reversal patterns, like really, really diving into it, really understanding it. Those reversal patterns, they're the telltale signs, spotting those areas, divergences, and mastering the breakout trade. So there's also a fake out breakout, the phobos. We could learn to avoid them, because a lot of times we end up losing money on them, and it is easy to avoid. You will have unlimited access to this curriculum. All of this is valued at $1,600. Okay, you'll get the tutorial, you'll have total trust in your equipment, understanding those trends, fully understanding all of that, and breakout trades. And why is it okay for athletes to have coaches and mentors, who they're talking to? How do they know they're doing it right? Because they have that accountability. So my bonus to you guys, for 1 month, you will have unlimited one-on-one mentorship with me. So it's not going to be ever, oh, how do I know I'm doing it right? Am I doing this right? Is this correct? You don't have to worry about that. We will have unlimited one-on-one mentorship and feedback with me. And one last bonus that you will get, I have a live trade chat room. It's me. There are no moderators, no hired hands. It's me. You will have 30-day free membership in this live trade chat room. 30 free days you will have with me, where it's me. We implement everything we're learning in the live market as we are taking live trades and understanding. So the whole value is $2,600. For you guys only, $97. One-time fee, one time. It is not a monthly thing. It is not a recurrence. It's not a membership. One time, $97. Right here, bootcamp4daytrading.com. Bootcamp4daytrading.com. Here's the reality, guys. We all know right now, I can guarantee that $97 is not even half of what you put on a daily trade. $97, you get everything that I just said, plus working with me one-on-one and 30 days in my live trade chat room. Bootcamp4daytrading.com. All right, here's what some of my students said, and I have students from all over the world. I just finished the boot camp. The feedback is invaluable. Best money I ever spent. This course is absolutely amazing. Marina is an amazing teacher. Fully immersed. This course is great. I'm non-tacky, non-math, stay-at-home mom, and I'm really, really catching on. So join today, guys. $97. Let's get real. You know for a fact that that's not even like half of a trade that you normally put in, and you're getting this whole education and working with me one-on-one. I normally charge $297 for this course. You do not get my mentorship or the live trade chat room with the regular boot camp, but only for you guys, 66% off. Bootcamp4daytrading.com. Bootcamp4daytrading.com, $97. But here's the thing, guys. Because of my mentorship, I am only able to take on 25 students to truly help you guys get really into the trading, and for me to be able to commit and work with you. And bootcamp4daytrading.com, and you can actually start with $59. $59, come on. This is like a no-brainer. It is not a membership. It's $97 one time, or there is a payment plan starting at $59 2 months. So bootcamp4daytrading.com. Bootcamp4daytrading.com. All right, guys, let me know if you have any questions at all, but we go over all of this. You have to learn how to be able to read the markets. I know that it's really, really tempting and really tantalizing to buy algorithms and the bots, but the reality is the only people making money from those are the people that are selling it to you. Why? Because they're gonna have to update it. They know that you don't really know what you're doing. People want the rich quick, the schemes, right? Like they want to become super rich in a day without understanding. We go over everything. You will have full control over this. You have full control and understanding, and You work with me, that mentorship, that is the most priceless thing of all. $97, guys. One-on-one working with me, bootcampfordaytrading.com. Bootcampfordaytrading.com. So let me know if you guys have any questions at all. Bootcampfordaytrading.com. Let me know if there's any questions, any way that I can help you. I am here to totally help you guys. Okay? And again, thank you everybody so much for being here and spending this afternoon or morning with me. And Anna, thank you again for inviting me. It's always a pleasure to be part of Investor Expos. I really love it. Thank you, everybody.
All right, so hey everybody, it's Mike and welcome to today's presentation. What I'm going to be talking about today is how to spot order flow trading opportunities. You know, these are great times to be in the markets. You know, since last Friday, markets had a lot of volatility, a lot of movement up, a lot of movement down, more importantly, over the last several days. And today is no different. So what I'm going to be talking about is opportunities that other traders don't see. You know, when traders, you know, go on Twitter and social media, you always see this quote: to be successful, you have to have an edge. Well, they don't really tell you how to find your edge, right? They just say, you know, it's just a blanket statement, which everybody says. I mean, there is truth to it. You know, you have to find something that works for you, that is going to give you an advantage over other people. You know, it's just like whether you're playing a sport, right? You have to be good at certain thing. You know, if you know, say you play football, right? American football. You know, if you're good at a certain position, that's your edge, right? If you play poker, you know, being able to tell, you know, what other players are doing, that's going to give you an edge. And it's no different in the market. You know, there's different ways to find edges. So what I'm going to share with you today is about how I developed my edge in the markets with order flow. And it's from order flow that you can spot more trading opportunities, right? I'm here to help you. You know, that's why I love doing these presentations with Investors Expo, is because it gives me a chance to share with everybody, you know, my experience, right? And if you're new to one of my presentations, let me just give you a brief background on who I am, right? I'm not somebody that just, you know, took up trading a few years ago and think, you know, oh, you know, I'm in the middle of a bull market, that, you know, I'm the next Warren Buffett. No, you know, I've got over 25 years professional trading experience. I started on the CME floor, literally at the bottom, you know, as a runner, right? Which is, you know, the lowest job you can get on the CME floor. That was back in the 1990s. And as electronic trading started growing and becoming, in my opinion, was going to be the next big thing, nobody didn't expect all the floors to close up as quickly as they did. I eventually left the floor and started trading on the upstairs trading desk back in the 90s, when Globex on the CME started really gaining a strong foothold. And, you know, the Chicago Board of Trade had what they call Project A. NYMEX Comex had their electronic trading system called Access. And, you know, I started doing that for several years, and I realized, you know, this is where the future is going to be. I got to really, you know, immerse myself in it. After 3 years at Dean Witter, I joined the English trading company, EDF Man, in Chicago on their global macro futures trading desk. I spent about 2 years there before joining the big German bank, Commerzbank. We had a desk in Chicago, and we had one of a handful, maybe I think there was like 6 or 8 actual Eurex trading terminals in the United States. And then the CFTC put a moratorium on them because they didn't want the competition. So, you know, back in the late 90s, I was one of literally just a handful of people trading on the Eurex exchange in the US. And then, you know, after September 11th, I took some time off. Then I joined Cargill, the big commodity trading firm, which just regained top position as the largest privately held company in the United States. And just put that in perspective, if it was a public company, it'd probably be ranked 7th or 8th as the biggest public company in the US. But, you know, they account for most of the grain exports in the US. When I say most, I mean, you know, about 30%, you know, meat exports about 25%. And they sent me out to Singapore when the exchange was closing down there, or not closing down, but the floor rather was closing down and was going electronic. And they wanted someone with electronic trading experience that can set up a trading desk there. That's how I ended up out in Singapore. And after setting that up, I joined JP Morgan. I spent 8 years there at JP Morgan as vice president of futures trading. And these are actual trading jobs, banging away on the trading system, every day buying and selling. It's not like I was just sitting in an office somewhere looking at spreadsheets. No, I was there trading, seeing what the effect of an order would have on the market, doing all the stuff that traders do. I left JP Morgan in 2013, and a few years later, while I was trading for myself, I started a company called orderflows.com. Now, the reason I'm telling you that is because, the charts that you're going to see are generated from the Order Flows Trader software, and it runs on NinjaTrader. So in 2015, I released the original Order Flows Trader software, which is software designed to help traders understand what's happening in the order flow. Okay, so we have pre-programmed tools in it that will help you not just see the order flow, but really understand what is going on in the order flow. I mean, it's one thing to be able to see the order flow, but if you can't make heads or tails of it, it's not going to be of any use to you. So again, the charts and tools that are used in this training are generated from my order flow software. But what I'm showing you today, you can be using it with, there's a lot of other software out there that already has footprint charts. So if you're using another software, hopefully you can take what you've learned today and apply it to the software you're already using, because now you know what to look for. And I'm going to show you how you can quickly and easily apply order flow analysis to your trading so you can make better informed trades. Now, if you stick around to the end, I realize that a lot of people, sometimes this is all new information to them and it just feels like you're drinking from a fire hose. So I'm going to show you how to get a copy of my book, Trading Order Flow. It's a 150-page book. You're not going to get a hard copy. You're going to get the digital download, but you're going to get it for free, right? Because that's my way of giving back to the trading community. Now, just a brief disclaimer: we all know trading involves risk. You should only trade with risk capital that can be lost without jeopardizing one's financial security or lifestyle. Don't go trading with money you can't afford to lose, in other words. So why order flow? All right. So what attracted me to order flow years ago, when I say years ago, I'm talking about in the 90s, was being able to see things happening in the market that other traders just don't see. Just seeing an order come into the market. All right. When there was a trading floor, open outcry of the pit, you can see the orders coming into the market. Then when we started going electronic, and I had the actual CME Globex trading terminal in front of me, I could see the orders hitting the order book and getting executed. Right? If you were just looking at a CQG back then, there wasn't many quote systems out there. It's like CQG, Thomson Reuters, DTN, and you just see the print go through. But being on a native terminal, I was able to see what was coming in, what was trading. Nowadays, you get all that information on pretty much any front end trading system, and not a lot of people are using it. A lot of people are still stuck on following the price on a chart. But what I'm going to show you is how to dig deeper into that chart and analyze the information that's available to you, right? Because it's with the order flow that you're going to be able to understand why a market moved when seemingly there was no reason for that movement, right? Or why the market stopped at a particular level. Okay, so for example, this was, 2 days ago, this was in the E-minis, right? We had a big sell-off overnight, and the market started selling off, then it rallied back up, right up to this level, 46.40, and then it tanked. Well, as a trader, right, you always want to know, oh, I wish I could have sold it over here. Well, if you knew what happened in the order flow, you can see just by looking to the left if there was anything here, right? And I'm going to show you how using software is going to help you do that. Because, if you could get in up here, right, with a very, what I call a low risk trade, put in an offer up here at 46.40 while it's trading down here at 4,600, you have an offer sitting up there, with, a 2 or 3 point stop to catch that 40, 50 point move down, And if you're looking at the order flow, you will know that, up here at 46.45, over here at 46.35, there was very aggressive selling. And as a trader, what you're going to want to see is when the market comes back to those areas where you had the aggressive selling earlier, right? First time you came back up to this 46, 46.35-ish area, the market came off a bit, sort of struggled around there, then went back up through it to its next level up here, tested it, came off. Doesn't look like much, but this is actually a move of, about almost 20 points right here, this little move, because, it was just a gigantic move this day. But then, it came right back up again, tested that level again, and sold off. So what's that telling you is, the first time there was still sellers up here, right? Came back up, you're still expecting sellers up here, right? And the market sold off. Again, you're not risking, 20 points or anything. You're just throwing an offer up in here, with, a point or two risk. You don't need to risk such big amounts, right? But it's giving you a nice entry to catch a nice move down. So order flow is based on what's happening right now in the market, right? It's based on the trading that's happening, and it's based, more importantly, on the present, right? Not the past. So, even though I say it's not based on the past, there's a level here from the past, but as we're coming up, is the market confirming that it's rejecting these levels, right? When I say you're trading in the present, as the market comes up to a level, whether it's based on order flow or your own type of level that you determine, watching how the market reacts in the order flow, it's going to give you an edge over other traders, because you can see whether that level is being rejected or being accepted, or if we're going to go right through it. So what benefits traders more is analyzing what's happening right now in the market based on what's trading right now. And that's where a lot of traders sort of miss a step. Okay, they think that, well, I have my level, that's all that I need. Well, really, you got to start watching what happens when the market reaches your level, right? Is the market going to react to it or not, right? I mean, one of the problems with people with technical analysis, they think it always has to work 100% of the time. It doesn't. And if you've ever studied technical analysis, maybe, there's all these different formations and patterns. Some of the best ones maybe work about 60%, 65% of the time. That's not a very good winning percentage per se, but more importantly, you can increase that level by seeing what is happening in the market, in the order flow, as you reach a specific level in the order flow. Okay, so in order flow, right, there's three main building blocks. There's delta, point of control, and imbalances. Okay, and most order flow software will show you all that. But I wanted an easier way to analyze that market generated information rather than just put it right in front of my face. That's why I created my own software, the Order Flows Trader 3.0, which takes the information that you see in the time of sales and depth of market and transforms it into an easy to read format. Okay, because it's not like when everyone thinks of mobile phones, they think of the iPhone. Steve Jobs didn't invent the mobile phone. He just took the existing technology and made it better, right, by improving it. And that's sort of what I wanted to do with order flow, right? I wanted to take the existing technology and improve it to help me with my analysis. Now, have you ever stopped and thought about how your chart is constructed? Most people don't. They think, oh, it's based on, high and low, and, and it is. It's basic, right? This is your basic candlestick chart, red bars, green bars, okay? And you got your wicks. So you got your open, your high, your low, your close, right? But where does all this information come from? Well, it comes from the time and sales, right? It's the record of every trade that occurs on the exchange. And there's a time stamp, there's a volume stamp, tells you how it traded, whether it's on the bid or the offer. Honestly, I didn't really, it took me a while to really appreciate the value of that information. What was trading on the bid or what was trading on the offer. I remember the old CBOT Project A system would show the aggressor of a trade, meaning, if the bond market was, 16, 17 and someone bought 100 at 17, that was valuable information. I didn't really, at the time, I'm like, yeah, I don't really need to see that. But once I started processing it and understanding it, because, in the past, when there would be a big offer or a big bid, I'd always just sell one into it so I could see who's that on the other side. But then when I realized, hey, now I could see who the aggressor is, right? Who's selling the 100 into the bid, or who's buying 500, from the offer. That was good information. And it's the same thing, even though now you don't see the counterparty, but you can see, which side is more aggressive. So a footprint chart, the basic footprint chart has, your delta, which is the difference between aggressive buying and aggressive selling. It's got your point of control, which is your level with the most volume. It's got imbalances, right? So it's telling you, the price level, or in the two-way auction that has, more aggressive buying than aggressive selling. But that's just the basic software. And it had been that way for about 10 years. But I would always, do my own analysis, right? And I know a computer can help me by doing that analysis for me, right? I could read the importance of certain imbalances, where they appear in a bar, where does point of control appear in a bar, how is delta shaping up in a bar, and things like that, right? So as you can see, there's just so much more information. You still have, your candlestick, right? You still know where the market opened, where it closed, what the high, the low is in the bar, but now able to take it a step further, right? I can see where traders are being more aggressive at a certain time or a certain price. If there's a big support level in the market, or if what is trading is forming a support level, right? So again, there's more to it than just seeing delta, imbalances, and point of control. You got to start putting those pieces together. It's a bit like a puzzle. So when traders first learn about order flow, they just learn what delta is, what point of control is, what imbalances are, and that's good. You need to know that. But then they're sort of left to figure out, what does that mean? How to put these pieces of information together. And it's difficult for people, honestly. It's like I've got kids who are taking lessons. Like right now they're in swimming lessons, and they're trying to learn the importance of, well, this is this stroke. Well, why do you need to use that, and when do you need to use it? And it's just the same as delta, or point of control, and imbalances. You don't use it all at once. You use imbalances at this particular point, or you want to look at point of control here, or you want to know what delta is doing here, right? So you got to know how to use it. So what I'm going to show you is, again, it can be done by just looking at any footprint chart. I'm going to show you on my footprint chart, and I'm going to show you some of the tools that I've developed to, make it a little bit easier. Because when the market is moving, just like today, I said yesterday, but today it's up and down, right? Yesterday also up and down, and it's easy to miss things, right? Because the market's moving so fast. Sometimes you get excited if you're watching, the dome, prices just jumping up and down. You're going to easily overlook things and miss things. So, I'm a big believer in let the trading software do the heavy lifting for you and show you things in the order flow, right? Like whether it's market weakness or market strength, right? Or price rejection. Because after all, order flow is about understanding what traders are doing in the market, right? And you need an easy way to process that information. Don't make trading too difficult that you can't understand what's happening, right? But again, you got to know how to connect the dots, right? You got to know when to use delta, when to use point of control, when to use imbalances, right? And how to put them together. All right, so common understanding of market theory is that markets move from balance to imbalance to balance. That's basic, right? But what traders fail to often consider is what happens when the market moves back to its previous imbalance, right? Because, literally for the last year, market's just been, straight up almost. Well, not straight up, but on a 45-degree line. But, markets retrace all the time, right? They come back to previous areas of imbalance. They just don't go from balance to balance. Sometimes they go back to an imbalance area. And again, this is just yesterday. A lot of these, this is just last night, 12 hours ago. we hit our high, market came off, it rallied right back up to this level here, 45.34, and then sold off a bit, good 5-6 points. It's 8 o'clock last night. Well, that's because there was aggressive selling interest there, right? We had just hit the high. What we have here is what we call a stack selling imbalance, right? This is order flow 101, stack selling imbalance, very nice, neat, easy to see, right? You have imbalances in the order flow, 30 against 0, right? In the two-way auction at this price, 34 against 34 and a quarter, 30 lots traded on the bid, nothing on the offer. 33 and 3/4, 7 lots versus 1 at 34. 33 and a half, 6 versus 0 at 3 3/4. So what you have is a stacked selling imbalances. You have 3 selling imbalances all neatly stacked on top of each other, right? And then you have this zone drawn out. Now our software will draw the zone out until the price comes back up to that area. So you can see market sold off, came circled right back up here, hit this area. Got through. It doesn't necessarily mean it has to stop right on that area. When the market's a little bit more volatile, like today, sometimes you breach the area by a few ticks, and then you continue in that direction. But imagine you're sitting in here with an offer, at 33 and a half, a stop, maybe a point, 2 points, point and a half higher, 35 and a half. You could have easily just gotten a quick 5 points. Right, over the next 5 minutes, it just came up that area, came off, and you're only risking, a point and a half, 2 points, 2 points to get, 5 points? That's a 2-to-1 risk to reward ratio, right? This is yesterday during the day session, right? Market's coming off, right? Bounces back up, just sort of stops here at this 41-ish area, goes sideways, boom, 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 and then sells off, 10 points. Well, why? What was happening here? This is not an area where it's like, oh, you had some resistance coming in here or here or here. People say, well, you got to draw this line out from here. No, you don't. Just look at the order flow. Because earlier, as the market was selling off, you had this stack selling imbalance here, right in here at 41. Right? You just have an offer sitting in here at 41. Right? It's with a stop at 42, 42 and a half, 43. That's going to give you a nice, look at that. It sold off from 41 all the way down to 30. Again, you're just risking, a point and a half, 2 points to get 5, 10 points out of the market. Okay, it looks it looks very similar to the previous chart I just showed you, right? But this is later in the day. This is around 12:30 yesterday. The first chart I showed you was 10:30, right? Market's coming off, comes right back up, sort of stops around this area up in here, around 06, 07, and then it sells off right down in here, right? Another 10 points. Well, why? You have this stack selling imbalance right here, right? It don't make trading so complicated, right? This is a very basic, very easy to see, very visual thing to see on your chart. Again, you throw an offer in here at 06, 07, the stop at 8.5, 9. Even in the next, in that area, there's one bar you could have sold those 7s and covered it down almost at 00. You could have got your 5 points right in this one bar alone. Now, market sold off, right? We sold all the way down to, at this time was around 80, right? Well, why did the market stop here and all of a sudden rally, right? It rallied from the 80 area all the way up to 95. Well, earlier, from the day before, actually, you had aggressive buying interest at this area. It took, almost the whole session to come back to that level. But imagine, if you just, this level, right? This is the level you saw yesterday. Finally got back down to that area, breached it by a couple ticks. But again, if you're buying it in here at 78, you got to stop at, 77 and a half or even 76, 77. Boom, it just rallied right up. It's a nice strong move up, right? Came all the way back down, right? We're trading 46. What was the high yesterday? Like 46.50. Came all the way down, finally hit that area. Then we rallied almost immediately, a quick 15, 20 points. Now, stacked imbalances are nice, right? They're very visual, they're very easy to see, but every order flow trader can easily spot it, right? And there's nothing wrong with that, because it's good, because you want other people to see what you're seeing and do the same thing, because that's going to help you get those moves, right? It's going to be difficult if you're always trying to swim against everybody, so to speak, right? If you think you have a magic way of finding your own levels, but nobody else is seeing those, then those levels probably aren't going to work for you, because there's nobody else buying or selling based off of the levels that you're seeing. What you want to see is some things that are very visual, that other traders are going to jump in and give the market that momentum. But the other thing I want to talk about is multiple imbalances in bars. So I call them multiple imbalance bars, and they're just bars that have like 3 or more imbalances, but they're not necessarily stacked neatly on top of each other to give you a nice, neat stacked imbalance. Think of it this way. Think of it as an imbalance turning point. So this was crude oil yesterday, right? Low of the day, right? Then we rallied 50 cents in 15 minutes, right? A nice quick rally. Well, what's happening down here at the low of the day? Well, you have a bar in here with 3 buying imbalances, right? Boom. That's your trigger telling you, hey, you know what? Aggressive buyers are stepping in. Even the next bar had, about 5 buying imbalances in it, right? So you know that there's that momentum now, buying momentum in the market, because you have the aggressive trading coming in. So that's your clue. Again, you're not trying to predict the bottom, but once you see the aggressive buying come in, you think, hey, you know what? Maybe this bottom can hold, and I could buy, because where's your stop going to be? It's going to be at the, just below the low, because if you take out that low, then this aggressive buying doesn't, the whole premise for getting long off this aggressive buying is no longer there. But when you buy, then you start seeing more aggressive buying coming in. That's what you want to see. You don't want to see aggressive selling coming in if you're trying to buy. This was gold yesterday. This was gold Monday, right? Got $5 rally after the low has been established. Well, what can you see in this low that's going to give you a clue? Well, you got a bar with 1, 2, 3, 4, 5, 6, 7 buying imbalances in it. All right, that's your clue that, you know what, the aggressive buyers have finally stepped into the market. Maybe this market could finally start moving higher, right? Then you just sort of see in the next few bars sort of go sideways. But more importantly, you don't have that aggressive selling moving the market down. You're still seeing some signs of aggressive buying before it finally pops up and makes a nice $5 move. This is Japanese yen. Okay, you're at the high of the day, 88.87, and then the market sells off all the way down to almost 88.00. But what's happening up in here, right? This is where looking at the order flow is just going to give you that extra advantage over other people. You'll notice it hits this high, it comes back towards it, can't get up there before it finally starts grinding its way a little bit lower, then boom, the bottom just falls out. But as clear as day here on a footprint chart, if you're looking at the order flow, you got multiple imbalances in here. 1, 2, 3, 4. Right? You'll notice what the software does is it puts a box around the bar. Right? It's not brain surgery. I like to call it, oh, this is the order flow imbalance algo. No, it's not. It's simple. There's people out there that will, try and sell you a bag of beans, but it's really just simple, right? It's simple tools to make trading easier, right? You got the box around there telling you that you have aggressive selling coming into the bar, right? Now, you're at the high of the day. You always want to be asking yourself, is this market going to keep going higher, or is it going to react off this and sell off? Well, when you start seeing the aggressive selling coming in, you should, put that thought that the market's going to go higher sort of on the back burner, because you have aggressive selling at the high of the day. Just as in the gold earlier, aggressive buying coming in at the low of the day, right? Crude oil, aggressive buying coming in at the low of the day. Going into the lows, you're expecting to see aggressive selling, and you see these bars, multiple imbalances, multiple imbalances, multiple imbalances, even this bar, multiple imbalances, right? That's what you see, these purple, these magenta boxes around. But finally, you see the green candle, the up candle with the purple box telling you the aggressive buying is coming in, but it's spread out in the bar, right? It's not neatly stacked, neatly 3 in a row on top of each other. You know, this gold one, it's spread out as well. You get 7 imbalances, but they're really spread out in the bar. So again, if the market's moving quickly, it's not something you're going to necessarily notice that, oh, there's a lot of buying imbalances in here. That's why we just simply put the box around there to sort of help your trading become easier. Now, the thing that I want to talk about here now is something that it deals with delta in the bar, right? Delta is the difference between aggressive buying and aggressive selling in a bar. And this is a way to see trap traders, right? By using the delta. Everyone talks about trap trader. Oh, there's trap traders in the market. They'll look at a normal bar chart and they'll say, oh, there's trap traders here. Well, how can you tell, right? They'll say, well, price is rejected because I got a wick here or something like that. It's just all hypotheses, right? They're just guessing. And oftentimes you're guessing it well after the fact that it happened. So when you're looking at delta and trying to determine if there's trap traders, now this is a bit more advanced, but you don't need any fancy tools to see it, just an order flow footprint chart. And I'll show you how to see it in here. Now, this is a 5-minute chart. And you can see this red bar here, right? Normally, when you're seeing down candles, red candles, right, down bars, you expect to see negative delta, right? Like see red candle here, negative delta minus 3,000. Another red candle, minus 2,000. But this one's got positive delta, 154. There's another one here, positive delta, 765. And there's this other one here also, the one in the middle I didn't mark. It's got positive delta of 125. But the important ones are these two, right? Because market sold off, came back up, market sold off, came back up, starts coming back down a little bit. But you have positive delta. And you're like, well, how can the market go down on positive delta? Well, the reason it's going down on positive delta is because you have supply in the market, in this case, in this red candle. So people were buying it, expecting this market to go higher. So someone was absorbing that buying. So those buyers, those aggressive buyers are getting trapped in the market, right? They're, I don't want to say, someone is trying to trap them, but rather, they're sort of doing it to themselves. They're buying it in hopes the market is going up because there's somebody there absorbing all their buying. That's what's causing the positive delta. Now you can see here I have the ask volume and the bid volume, these top two numbers. So it's 12,586 was the volume on the aggressive buyers, whereas the aggressive sellers was 12,432. That's why you only end up with 154. Similar thing in this other bar. So the market sold off. This was a quick sell-off of about over 15 points. This is a 5-minute E-mini chart. Came back up, starts selling off, and as you're coming back down, there's people offering it in here. There's supply. You could look at the footprint. You can see, well, 1,200 traded here. That's one of the reasons why you got such a big positive delta. But when it hit this level, 45.90, there's a big seller there, right? Someone's got supply. So everyone that was buying it, because you can remember the market just rallied about 15 points. People are thinking, hey, it's going to go higher, right? Market just went all the way up to 96, 97. It's coming back down 6 points lower. Hey, I could buy it because I think this market's going back up. But there's someone in there offering it out. They're buying it. They can't sustain that move. Market drops, right? Market drops, comes sort of back up towards that level over the next 3 bars before falling over. But that is a sign when you see these red candles with the positive delta or a green candle with negative delta, which I'll show you in a minute. Right, those are often signs of supply coming into the market, right, or absorption, in other words, coming into the market. This is what it looked like on the candlestick chart yesterday, right? You can't tell that there was, people getting trapped up in here. They're sort of doing it again. They're doing it to themselves, thinking the market's going to finally start to rally. But there's, bigger traders there that have a lot of supply, happy to sell it to them all day long. And we know what happened with the market yesterday going into the close. Now here's another example. This is Monday, the 30th, or Tuesday rather. Excuse me. You rally all the way up to a swing high, positive delta, 447. Okay, you got positive delta. Why is the market selling off? Well, it's because early in this bar, people are excited, thinking this market is going higher, but it can't sustain that move, right? So there was people up here happy to sell it to these willing buyers. People here, take my money, think this market's going up. Once that rush of buying ended, what happened? When there's no more buyers, market's just going to fall naturally. This is what it did, right? It was a nice move, 4,600 all the way down to 4,590. Quick 10-point move. So 1 minute chart over 1, 2, 3, 4, 5, 6 minutes. Another example, this is crude oil yesterday, right? Again, swing high, big positive delta, 123. Why? It's because market rallied up. People are thinking, hey, this rally's, I got to get in. FOMO, get me in. Okay, they got in. Well, unfortunately, that was the end of the move. The sign is right here, the red candle, the down candle with the positive delta at the swing high. Market dropped literally in the next 3 minutes, 4 minutes, almost 75 cents, right? Quickly, right? It's not something you're sitting there trying to, wait all day for. These are, when you're dealing with order flow, the moves can happen very quickly. All right, it's not something that's just going to sort of meander. Now, earlier you had a bar here. There's a red candle, kind of at a swing high. It sold off a little bit, not the dramatic sell-off that you have here, but then it just sort of went sideways before coming back up. People say, well, yeah, you had this one trade here and it was maybe a loser, right? I mean, I don't know, maybe you could have scalped a few ticks out of it. Noticing that was coming back up, maybe you scratched it. But really what you're looking for with the order flow is the move to happen fast. If it doesn't happen within the next couple of bars, chances are it's not going to really happen. But again, are you willing to take this trade here? This is a trade I would take. Okay, it didn't work out. You scratch the trade, maybe you lose 5 cents. You take the next one. Boom, it's never really against you. Once you get in, once this market starts dropping here, you get in. Doesn't come all the way back up here. It doesn't test the high. It just immediately moves the way it's supposed to move. This was, again, crude oil. Now, this was on the low yesterday. Okay, what do you see here? Well, you see negative delta. It's an up candle. It's a green candle. So what's that telling you? You had supportive buying in that market. You can see it in here, 78, 70, 70. You're seeing some strong bids in here. So aggressive sellers are selling into these bids. These bidders were happy to absorb all their selling. But once these guys are done selling, there's nobody left to sell. What do you think is going to happen? Well, market's going to rally back up, right? This time it rallied another 75 cents, in about 15 minutes. Now, a lot of the examples I show you is at the highs or the lows, swing highs or swing lows, or highs of the day, lows of the day. But you have to understand it can happen anywhere. Now, I don't like to just take it because it happened, right? You got a red bar with positive delta or a green bar with negative delta. I like to put it in context, right? So if I can see, sort of a market is sort of topping out and start coming down, I'll take it. Not necessarily in the middle of a move, but that's why I like to see them at highs or lows, swing highs or swing lows. This was like an hour ago. This was in the S&Ps, right? Market shot up and then sold off, right? What do you have up here at this swing high? Clear swing high. Positive delta, right? There was aggressive buying in here, but there was also met with supply, right? There are traders there happy to absorb all their buying. Then the market did what it's going to do once that aggressive buying finishes. Then you'll notice right after that, what do you see? Bars with multiple imbalances. You're seeing stacked selling imbalances. So not only do you have traders that are trapped up here, but then as the market starts moving, there's lighter fluid is thrown onto the fire in the terms of imbalances, stacked imbalances, multiple imbalances, telling you that, hey, you know what, sellers are coming into the market and they're coming in strong. So even if you're like, well, I'm not sure about this high, once you start seeing the aggressive selling coming in this bar, and you're getting in here, at 46, just a quick 10 points in 5 minutes this morning, so hopefully you can see things and how to use it. Now you can see, what the importance is of delta, what the importance is of imbalances. I haven't even touched on point of controls. I mean, that's a whole another training session. But if you're interested in that, go to my YouTube channel. I got a lot of information on how to understand what's happening in the order flow with point of control as well. So remember, right, the information you see on your bar charts come from what's traded in the market, right? What you see in the time and sales. But candlestick chart, your bar chart, leaves out the most important part of data, the volume traded on the bid, the volume that's traded on the offer, and more importantly, how to use it, right? Because it's one thing to have that information, you got to know how to use it, and you got to format it as well, right? And that's what the footprint chart does, is it helps you format the data so that you can use it and analyze it. So always trade in context of the market. That's what being a trader is all about, right? You don't just go out and start trading every bar that a multiple imbalance appears. Put it in context of the market. Don't go out and trade every bar that has a diverging delta. Put it in context of the market. That to me, that's sort of the holy grail of trading, is putting the information that you're seeing in context, right? It's not that every time you see an instance of something happening in the market that you just got to go and take that trade. No, you got to put the puzzle piece in the puzzle, right? That's how you're going to solve it. So in the past 40 minutes, I hope you're going to agree it's been time well spent. But again, I can't cover everything in a 60-minute training session or even a 40-minute training session. So, but I got a special offer that you get everything you need to know about order flow. And if you act fast, I'll give you a very special deal. And earlier I talked about the Order Flows Trader 3.0. And again, you saw the charts that I used in this presentation are generated from the Order Flows Trader 3.0, and it works on NinjaTrader 8. It's not available for other platforms. It's NinjaTrader 8 right now. And it's the volume footprint chart with 17 pre-programmed order flow tools. I talked about the multiple imbalances tool today. That's just one of them, right? And I like software that's easy to use. I don't like to buy software and have to spend an afternoon trying to figure it out. It really is, it takes about 2 minutes to set the whole thing up. You don't need templates or anything like that, because the default settings are defaulted for an E-mini 1-minute chart, which is where most traders start. And its normal price is $899. And you're not going to pay that today. But really what the order flows trader is like, it's like taking a HDMI cable, plugging it into my brain, right? So you can see what the institutional traders are doing in the market, right? Because you want to know, these areas of importance in the market. Now, having order flow software is one thing. You still got to know how to use it, right? So I provide a lot of further education on how to trade with order flow. So, again, if you take my special deal today, you can get access to my order flow trading course, which I normally sell for $297. You can get that for free, but I'm also throw in access to my Inner Circle video series, which is 56 advanced order flow videos talking about little tips, analysis, and tricks. So if you add the software, the training, and the video series, that's already almost $1,700. Now, I realize it's one thing to learn from videos and books, but it takes discipline and commitment, sit down and watch this, right? I've got a lot of courses I've bought that haven't been watched. So what I found very helpful is to provide live training where you can come in and ask questions. So for the last 2 or 3 years, I've been doing a live user session every Tuesday night where I drive home what I see in the order flow for the past week. You can ask your questions and areas that you're going to be struggling in your analysis. Now it's free for all users. There's over 146 videos in there, so it gives you an idea of how long I've been doing this for. It's every week, so I'm at week 146. Some companies want to charge you extra for that training. We give it to you for free. So, you're already pushing about $1,800, $1,900 for all this, but you're going to get it for just a one-time payment of $749. You just got to go to orderflows.com/oft3, and you just click on the link in there, put it in the chat there for people. There's no monthly recurring payments or any other payments in the future. Of course, you do need a real-time data feed. But again, what other people are saying about the software is, it's been remarkably helpful. I can clearly see now what's happening in the market, right? And really, that's what you want to do, is you want to understand what you're seeing in the market. So you just go to orderflows.com/oft3, OFT, the number 3.html. Page looks like this. Scroll down, get to the page, click here to buy now. Now again, I got some other instructional videos and examples that you can take a look at. And you're going to see it's just a one-time payment of $749, takes you to PayPal. It's processed through PayPal, which everyone has. I don't want your credit card information. I don't need it. It's just a one-time payment. And as a special bonus for people that came in through Investors Expo, I'm going to give you access to the Order Flow Playbook, which is one of my favorite courses that I've made. It's got a bunch of trade setups in there that you can also look for in the order flow. Normally it's $297. You're going to get it for free. So get started, right? Just go to orderflows.com/oft3. This is what you're going to get: the Order Flows Trader software, the trading course, the Inner Circle video series, access to the weekly group training, and the playbook. But again, it's just a one-time payment, $749. To get my book, just go to orderflows.com/book.html, enter your name, email address, and it takes you to the next page to where you can download it. So get started, right? Just go to orderflows.com/oft3.html.
Welcome everybody, and good to have you here. I want to show you a lot of integral answers to key questions in trading. Yeah, my topic today, how to trade into and during 2022, because the year is going off the calendar and the new year is going to start quick. So let us look what I can do for you to improve your trading in the months that we have and in the months to come. Yeah, so first of all, we're going to look at who drives the markets and why. Combined with that, what is the overall market action and what do we need to expect or assume? System decisions, how can a system help you to move ahead in your trading within finding key price turning points? You'll hear that word a couple of times today. We talk about entries, exits, and stops because they are instrumental for successful trading. And I give you a lot of examples of real life charts that just come from the last couple of days so that you see the happening. With that, I want to make you aware of the risk in trading and that I'm here as a trader and educator, not financial advisor or broker or dealer. And to never loss trading, the idea comes from never stop loss trading. So that's a concept where we don't take the stop, we repair the trade, but never stop loss trading was a bit lengthy. We don't want to say we never lose a trade. We're an algorithmic trading house and we have high probability trading. So with that, let's dive into it. Financial markets, when we are looking at those, what do we usually understand? That's the stock market or the different stock markets that we have. Then we have interest rate or treasuries. Yeah, that's everything to do with bonds and notes. Then we have currencies and definitely commodities, yeah, like copper, oil, and derivatives. What is that? Those would be the options and futures. And we'll talk about the futures in particular today here in the presentation. And the question is, who are the key players? Institutional money is driving the markets. And I want to show you today methods of how you can spot and follow institutional instigated price action to the upside and to the downside with system-made decisions for entry, exit, and stops. But now into the dough. Who are the key players? And I put them in 3 buckets. Yeah, so there's first of all fund managers. You have pension funds, mutual funds, ETFs, hedge funds, professional funds. Then you have the pro traders. You see here Goldman, JP Morgan, Morgan Stanley. They trade their own account, yeah, and they do it pretty successful. And then we have liquidity providers. Those are the ones offering a bid and ask. And it doesn't mean here everybody just keeps their place where they are. There's interchanges where these play the market maker assigned or not assigned, and that's where the exchange takes place. And we as private investors have a nice edge because we can get in and out of positions faster than institutions can. And who are those all? Yeah, so that I'm talking about here. So let me go and highlight on that side here on the chart. Who are the key fund holders in the US? Yeah, there's surely also others outside, but in the US, money invested. Here, the biggest professional funds, BlackRock, yeah, $8.6 trillion of money invested, yeah. Number two, Vanguard, yeah, privately held company out of Philadelphia. And so I listed you all those to get an idea, okay, who's gonna take the other side of my trades? And most likely one of them's gonna do it. Some are fund holders, but they also follow with the fund which of the shares are more exchanged, and the ones initiating that is usually here the pro traders, because they have the best analysts in the world. They drive the market, they move into the one segment, out of another, and this makes money flow. And the opportunity is there for you with the right concept to participate where money flows. And we're gonna go and give you more details on that. Further of what I can explain here, if you like, write me an email, contact@neverlosttrading.com, subject the other side, yeah, who takes the other side of your trade. I'll give you in a free ebook insights, how does that all work, what you have here on that chart, and how can you have an edge as a private investor or retail trader, whatever you want to call you. Yeah? So now today's action, what we're going to look at. Stock markets are going to look at with you, derivatives, in particular here, futures, currencies, I'll leave on the outside, but these are all good trading grounds. Yeah, absolutely. And what is going to be going on with the markets? I put a little pros and cons of market drivers. First of all, through the economic easing, trillions of dollars got printed. They need to find a home and they end up somewhere in the financial markets. That's good. That's a positive driver. In the third quarter, the average S&P 500 company made about 30% higher than expected income. Very positive for further growth. The negative parts below, US-China relation, how all that pans out. Inflation, it is a topic, it is not as big as it is assumed, but it's there, has to be handled. And then on the bottom here, the COVID cases, seeing how we get through, because in Europe at the moment, they have relatively high cases, and that makes the market nervous of what's going on and how that will all pan out for us. But it's important for you as a trader or investor, where money moves, there's opportunities. You just have to have the concepts to, first of all, spot where money moves in and out, and have a concept to participate to the up and to the downside in any type of an account that you can hold. So let's move on. You'll see a lot of those charts today with me, and I just give you an insight. This one I posted this morning. Yeah, for the subscribers, we have a little channel, a Telegram, and there you see key handover points. It's actually a 4-hour chart of the ES, the E-mini S&P 500 contract, and you see here, there our indicators is sell, confirmed sell, and what did we do? Sell, and we mapped out how far will the direction go. It went a little further, but that doesn't matter for us. The same here, so that's how far it went to the upside, and this is how our algorithms are painting a picture here on the chart for you to spot and follow. Yeah, so that's what we do. Therefore, we develop these algorithms and we teach them one-on-one, because there's everybody basically who over more than 10 years of doing that has a different affinity to risk. How much risk can you accept per trade? And to individual trading units. Do you want to trade stocks, futures, Forex, commodities? For each and all of those, so that we have a solution. We'll go a little further and say 2022, take a note, please, that you should have on your list. Day trading. If your day job, if you don't have a day job, super. Day trading will give you a lot of opportunities. Why? Volatility is back, and that's good for day trading. swing trading, short-term engagements, because that's where a lot of money is going to flow in and out. You need a concept for this to make money in the year to come. Event trading, I'll go deeper into that. Every quarter we have earnings announcements. They offer wonderful opportunities, and I show you how you can participate in those. They're just watering out now, but January 14, we restart again. And you can capture those very nice with stocks and futures. Long term, I'm not going to go into the details of how to do that in this presentation, but find a risk limiting strategy for your portfolio holdings. If it's in a 401k, an IRA, where most people have 4 times the money than they have for the trading account, there you find strategies so that you can limit your risk, so that another market breakdown, if it's there, is not going to hurt you. Yeah, and that means also portfolio hedging. Have a strategy where you can hedge your portfolio in case something happens in an overnight session, that you wake up and you have an insurance in place, and that's going to be gone with stocks and futures as well. Yeah, so decision making. Many retail traders, they assume or guess or use an inferior product. And we want to invite you to trading at mechanical rules at key price turning points, which result from underlying changes in supply and demand. So buy and sell, that's what we do in the market, and bid and ask. Yeah. And what does it all mean? The market moves because either buyers or sellers move the market the one or the other direction. And our indicators specify where are these handover points. And you'll hear a lot from me that says only trade when directions are confirmed. That's important because you don't want to be alone latching on to a long or to a short opportunity. You want to have the opportunity to have others on your side driving the price to your exit point that you specify at entry. And I show you the reasoning and how we do that. Yeah, so the concept I share today here is made out of multiple little steps, but I'll make it very interesting for you, yeah, because the price is a result of a change in supply and demand. That's it. Yeah, price is so not a variable, it's a result. The initiation price change can be measured. So we found tools over many years and put more than, I'd say, 20,000 hours in putting them together, and we share them with you here. And here the price change leads either to a supported or an opposite price move. Here, some price changes are not supported, so that means price comes right back, but therefore we only want to enter when the direction is confirmed, and our indicators extrapolate when is that happening, how to enter, where to exit, and where to put your stop. Yeah, always the concept, don't you put the stop, repair your trade, but also that I kept outside of what I'm presenting today. So I show you 3 integral things: event trading, and I give you an example of never loss trading top line. I show you timeless trading, where we cut a big price move of time into small increments and better handleable fractals that you can trade with. And I show you how that's going to work. And our algo starter program, if you are a smaller account holder and you want to have an algo starter program, then tradecolors.com is our algo starter program. So let's do event trading. So what do I mean with that? Again, earnings. We have earnings every quarter, and balance sheet information gets shared, income statement, cash flow statement, market and sector approval, competitors, all of that comes out. And based on this, stocks make big moves to the up, to the downside, or some just make no move. It's not always meaningful how the market moves, but if you have the right strategy, and I want to share how we do it, in place, you have an edge and you can participate. The big banks or the big institutional investors, they estimate of what's going on for every company in earnings per share, sales, profit margins, units of sales, and then towards these estimates, reality kicks in, and then there's a comparison ratio to be done, and there's rating agencies that take that on, and then you see, okay, that some made the earnings result above expectation or below, and it doesn't necessarily mean that the share price goes up and down. And there's the crucial part: don't bet on meaningful price moves. Bet on price moves into the earnings report, bet on price moves after the earnings report. That's the smart way of doing it. Yeah, and I'll give you how we do it. We start about 4 weeks, 20 trading days in in advance to an earnings report to look at price action. If our indicators kick up, hey, listen, there is something you want to look at. This is an opportunity you can potentially capture. Here, I give you the top line chart in a moment. It has what we call power tower indicators. The power towers stand tall and point the direction. The program has market scanners, so you can scan on your own without our help when you subscribe to the program and find those opportunities. They always have clearly defined entries, exits, and stops. There's multiple indicators working together, and I show a little part of that today. And we'll teach that in 20 hours of individual training and also 3 months of coaching and feedback where we help you to do the things right. So that in front set, always individual training hours at your best available time, at your best available days, and we also work with you weekends depending on how it suits you best. So here's a chart of NVIDIA. Yeah, NVIDIA had about 4 weeks prior to earnings, surprise. Here a buy signal, buy above 257.09 if the next candle ticks it out. What you see here is a weekly chart, never lost trading top line. And we had mapped out in advance by our algo, this is about how far the price move is supposed to go. It went a little higher, but that doesn't matter. So here we focused on this one. We knew the earnings announcement is 11:17 after the market, but we were invited to do a nice trade. And in a matter of 1 week, entry and exit occurred in the same week. A 14.5% income on cash was made, double on margin. And if you traded one of our option strategies, a real solid income of more than doubling what you put into the market was possible. So again, we trade into earnings. We don't hold necessarily over earnings. If you have a position that you have long term, we show you how to protect yourself and leverage a little in and out of earnings. But for speculation, we trade in earnings and we trade out of earnings. And I'll give you an example in a moment out of earnings. But before we do that, I'll look with you at the rules. Yeah. So typically 2 days before earnings, we take off our speculative positions, knowing high volatility and craziness might occur, opposite price moves, and deep cuts will do drawdowns. And with that, we want to stay out of what the big money does to some of the holders that hold over earnings within stealing the stops. Yeah, so it's not a rational market at these points, but if you know it, you can be out 2 days prior and you can enter the day after, yeah, on a smart move when a signal tells you. So here on the side, you see with me, that is Starbucks. Yeah, so you saw super duper earnings, but it tanked, bang. Yeah, bad. Had you been in there long, you would not be in a good mood after that. Most likely then your stop got stolen. But here you have our never lost trading indicators telling you buy above 110.15, and we always add a little something to SPOO is our key defining element. We take 2% of that, add it on top, and that's gonna bring us here to our target price. Yeah. So the entry target price stop was right below here. So in a matter of a very short trade, we were able to capture on cash 4.6%. And so what's a short trade? Entry 1 day, 2 days, 3 days, 4 days in the market, trade over. And that's what we do over earnings in multiple dimensions. And with the right scanner on hand, there's hundreds of companies that come out for earnings. You can find these patterns and execute those trades in and out of earnings with never lost trading top line. There's also patterns that we have in top line. The patterns can be learned and followed. They're not always work, but they have a high probability to work. And the key is to control your risk. When you trade one of those patterns, control your risk so that you cannot get hurt, so that never, ever, ever more than 5% of your holdings get sacrificed in one trade, rather less. Yeah, so the patterns look like that. We have an extrapolation, I'll highlight it here a little, in that black curve. And the black curve tells you, usually at that time of the year around earnings, the share of IBM is gonna drop. And our system calculated it has a projected 12% drop in front of it. The red blue curve, that's the actual price for IBM, and it dropped 17%. So you can see all of this based on our indicators with the pattern and participate. And you can do that 4 times a year for hundreds of companies that are out there with their earnings. There's just a couple of examples. So we have 3 things: trade into earnings, trade out of earnings, trade a pattern over earnings, yeah, because that's what we do as well. So these opportunities we have integral in Never Lost Trading top line, but I show you also different avenues that you can go. Yeah, earnings will start again January 14. That's the day we pick because JP Morgan is going to come out and they have a lot to say for the direction. Yeah, in old times people said Alcoa is starting it, but since Alcoa, that was in 2013, got kicked out of the Dow, they don't matter that much anymore. Yeah. So our price move model to capture this is going as follows. Institutional leaders kick the price out of a certain containment. That gets recognized. When that gets confirmed by other market participants, we trade with it to the upside or to the downside. We are basically using a follower model on only confirmed moves. Yeah, if a high gets reached or a higher something and it gets not confirmed, you're not in the trade because you work with a buy stop or sell stop order. That's what we do for all the different systems we have. I just introduced you here to top line. That's the second here. I'm going to show you trend catching and trade colors too. Yeah, trade colors is our beginning concept. And the SPOO is integral in all these. The SPOO defines, based on statistical volatility, how far shall price moves go, and with that you can specify your target at entry. Yeah, and also it's specified how much wiggle room do you need to give to bring your trade to target. Yeah, where do you position or put your stop or price adjustment level to bring your trade to target? And it's a dynamic measure. It changes bar by bar, not radically, but it always keeps you on top so that you can have the right point where you exit before the rest of the market will sell off. Why? Nothing goes forever in one direction. At a certain point, it's attractive for some of the key holders to trade against. And how do they do it? They either flood supply, volume, or they reduce supply. And so this is what you have to put into your trading because that's the natural market reaction and market action. And I want to help you putting it on the chart for you. I give you some day trading examples. And here on day trading, because most people use time-based chart, we have a new concept that we call timeless trading because we cut the trading day into price increments and trade those very successfully, very strong. Yeah, so I give you an example for futures and also I throw in an example for stocks on day trading. Futures have great advantages because you can easily short sell them. There's restriction on short selling stocks. Then you can easily do risk limiting strategies because if you pick the right future, there's lots of volume. And I give you in advance a hint, we mostly focus in our futures day trading on the ES, the E-mini S&P 500 contract, and crude oil, because there is enough volume behind it. You can trade the euro, gold, or all of these, but they need to be learned a little more. For a beginning trader, those two should be a real good, solid focus. And so here's how the chart looks like. Let me magnify into it. So we have like traffic rules. Yeah, so you learn with these indicators, say, okay, here I go and take that trade. So the next candle ticks out that price threshold. Yeah, that was spelled out here. And then I carry it out to that dot. There I take my profit. And if I have another trade to the upside coming here, it's going to be spelled out. And so we take cuts throughout the up move and the down move. At certain points we stop and they are specified by a 3-SPOO move, and then we'll take definitely also moves to the downside, and we'll do that over and over in a day, and we have a very high attainment rate, usually 65%, but here with these combinations of 6 signals we usually range in about 69% of an attainment rate. And so the system defines you entry, exit, and stop. There's frequent signals, as you can see, put on the chart for you, and there's a set risk reward, because at each and every of those trades, you know the relation of your risk to your reward, and based on the probability of the setup, you have a favorable income strategy. And there's simple rules and multiple rules, but they can be learned. Look, one day at a time, you also learned how to ride a car in traffic, and there's certain rules that you can get through traffic safely. And that's the same here in trading. You learn the rules, which ones are to be taken, even so there is the point on the chart. But also we have traders that trade totally mechanical. They say it doesn't matter to me. I'll take each and one of them because I've made the experience they work, and they work more favorable for me if I take them, so I just trade mechanically. So I put that now in context. The last days, you see here November 29, we had here a floating up signal. We came out of the price containment, we took that home, done. We had another signal here, took it home, done. So the upside breakout, there was a winner. Continuation signal, there was a winner. Then here we have that black dot that says 3 SPU, careful to trade there. So we wouldn't go long here. Then it's a first leg down. We're not gonna take the first leg down, but we take the second, and there we took a confirmed winner on that breakdown. Yeah, so then continuation and the win. And so with these on the chart, you have multiple opportunities. This is just out of 2 days where I took a fraction of the day and show you here of how you can dissect big moves into manageable moves with that system. And you have a bottom indicator. That's a new thing we developed, took 10 years, but it's there now. And that will be in addition when you sign up for the concept. So you will have that too, because it will help you to trade at key price turning points. Here I give you a stock example, and I'm not going to go through each and every one of them. Tesla, yeah, each pop is here $26.60 in a matter of a day and a half. We had 9 winners and 4 losers. That's a 69% attainment rate, and a solid way to make money with the indicators on the top and on the bottom. And futures example for the last days, yeah, so you see here crude oil future, something else, November 29 and 30, when I prepared here for the presentation. Let me click on situation 1, easy, got ticked out in the next chart, in the next candle, done, yeah. Situation 2, first leg we don't take, it would have worked, but we don't take that, we take the second leg, that's the rule, that worked out too. Situation 3, breakout of the containment to the upside, yeah, there is the dot, and it was the first leg. So situation 4, we turn to the bottom. Situation 5, on the bottom, we have no support, and don't take it, and I can give you here that chance. You see, rules are printed on the chart. This is simple to put a sell stop order below 70.50. That's not rocket science. It's not rocket science to put a sell stop order below 68.58. And you will see in a continuation of the signal of where to put that, because I put up here on a normal chart an indicator that tells you where to enter. So you can in advance put your buy stop and sell stop order. If the price gets to the price threshold where you want to enter, then you'll just be in, and automatically on the chart, you know here, for example, this will be up and down 40 ticks. So that means 40 cents, and translates into $400 of each individual move to the up or to the downside. And you see they were piling up a lot of good and solid moves. And it works also time-based, but time-based, you just have at the moment a very high risk threshold. Daily, we move about $3.50 in crude oil. That's $3,500 of a price change of the underlying. That's very high. But those of you who want to trade a derivative like USO, put or call options, we can show you that too. You can still participate in those opportunities, translating the action that's here on the chart for daily into good high probability trades. You see here 1 winner, 2, 3, 4, 1 loss, 5, 6. That's high probability trading. And then here we have no confirmed signal on that big candle, but also risk reward would be way out of bounds. Yeah, so we wouldn't want to have a trade on this. Yeah, so here the crude oil futures of November 29 in a smaller dissection, as I had shown you, they are there for you to take $400 and $500 opportunities on a pop out of the market. Nothing comes risk-free. You'll have to put relative appropriate risk to it. And if you want to be part of that offer, I'll have here the following for you as a special year-end offer. Trend catching is 6,997. Then you have a new indicator, the timeless trading concept on top of it. That's basically two $4,000 opportunities for free on top of it, a $14,494 investment normally, 6 hours of training, 2 months of coaching. But today, special offer year end, and I don't do that normally, just year end, because Anna asked me if I can do something special, and I will. Appreciating to be here and talking to you. $6,500 one-time payment price. You want to finance it, we work through PayPal. They give you the financing, that's fine, but we are not doing the financing. We concentrate on trading, not trying to collect money. And here you see, this is the market we are trading in. Let me go back, my mouse was too fast. There is a lot of volatility going on. Volatility is back. Big candles. This morning we mapped out when that price action breaks, we most likely go all the way above here. So we have clear zones and areas which we trade in and out of. And the system gives you multiple opportunities, as you saw here, to participate in those, to the up and the downside. And if you just say, okay, I'll do 3 trades a day, I win 2 and I lose 1, and each one of them is $500 worth, that's a $400 expectation rate in the day. But some people, and that's, I encourage you for that, trade less rather than more. When you make 2 good pops, take it. Because you know then the probability is high that the third one is not going to go to your direction. It's high probability, but not always true. And so with the capital, you can do a great return. So depending on who your broker is, yes, some people who trade with Ninja, there's a $500 bracket order. And then you make with a $400 expected return, you made 80% return on capital. And if you trade with other brokers that do maintenance margin as the day margin, then you still make a 3.3% return per day. That's big. Yeah, count up 250 trading days. They'll not all be winners, but if you'll do that, you'll talk about high probability trading. And as said, my special offer for the entire package with the education, and we do more than just the day trading. We'll focus with you on what you want to achieve in your IRA account. If you have a 401k account, if you have some longer term things going, we'll work that all in the concept. I prepare for every hour and I prepare individually for what you want to reach. So there is no concept that takes everybody to the same level. It depends of where your affinity is, what you want to reach, where your risk acceptance is, and we'll tune everything tailor-made for you. So now I want to show you our trade colors offer. So that's the beginning algo trade. In that beginning algo trade, we basically do the following. Yeah, we'll have, let me take a pen here. We have 2 of a kind, yeah, of candles, and the high of the second is taken out. We go long. We have 2 of a kind of a red candle, and the low is taken out. We go short. Very simple trading environment that we want to establish here. So let me erase all drawings so that I can move on. And I also want to have my clicker back. And so the system, you spot institutional money moves with that. We don't have a spelled out price threshold, but also here I'll add the new indicator. It's called spool move indicator as a bottom indicator. There you have your entry points, and you can combine the two for a higher participation rate and trade at crucial price turning points. Yeah, so I'll make a little rhyme here. Trading is now easy for you. You can count candles 1, 2, 3. Yeah, and so there you can go 2 of a kind, and let's put them on the chart for you. We have about a 65% attainment rate with that program. Yeah, so, and I'll show you some of the example. Let's go left to right. The bottom indicator, which will be part of the concept, yeah, it actually costs more than a concept, but that's the year-end special, tells you here, buy me, but not confirmed. Next candle wasn't ticking out the buy threshold. Yeah, so, but 2 candles later, you had the instance, yeah, 2 of a kind, high taken out, you go long. Then the bottom indicator was ticking this one out, bringing it home. Yeah, and this is how you can trade with the concept combining a bottom indication and a top indication of two of a kind, high, low, ticked out, and you trade along with that. Yeah, so this is giving you the opportunity to, first of all, to trade per distance, yeah, for a certain SPU or approximated price move distance, but also over time, you know, after 5 bars, either you are at target or stop. If that's not happening, close your trade because the direction might not continue, and we rather make a scratch trade or a little win or a little loss than sacrificing the entire amount of money that we were putting into that trade at the beginning. Yeah, so it works here for a 10-minute chart on the ES, what I put on here. So you see here, okay, early entries through the bottom indicator confirmed in the next direction, and you can carry out the trade. And you see here again, confirming direction, you carry out the trade. This one takes then the 5 candles to come to a meaningful target and reach its goal. But I want to show you real life examples that repeat themselves where you trade with confirmed signals. Yeah, so here you were ready to do the trade. Next candle didn't tick out the high, but your 2 candle combination that you see here then ticked out the high here, and you were able to capture this. Same on the second. First one didn't tick. Second combination of 2 red ones got you into the direction, and you were able to follow the price direction to the downside. What you see here is now a daily chart of Apple. So there is no limitation to the timeless strategy. It works on time-based chart, it works on tick-based charts, and it works on our timeless charts. Let's give you an offer and hope you like that. Trade Colors internet price is $2,612. You see that on our website. We have the SPU move indicator be added, $3,997. Super special offer, so software for $6,609. Year-end special here for us, here for you as a participant, $2,497. 4 hours of training, 1 month of coaching where we bounce off opportunities. If you then want to continue work with us, we have programs that we can talk to each other, find each other, and help and support until you can get independent. The big thing is with our software and everything, you can be independent. You don't need us to call out trades or tell you when to trade. The chart will tell when to buy or sell. That's the big advantage, because you know, if you want to be an after-hour trader, for example, and you want to trade futures, there's enough opportunities. The charts had them on. I wasn't referring especially to them. I might do at the end of the presentation when we still have time, but there is super duper after-hour trades. When is the after-hour starting? Basically, the stock market every day through the futures opens at 6 p.m. East. Yeah, 6 p.m. East, the market starts and then carries out through the night. And the stock market, yeah, that starts at 9:30 a.m. East. But then the futures already, and futures are stock, made a new price point where the stock price will be translated to. Yeah, and so with our systems and strategies, we help you to identify price movers, specify entry, exit, and stop, limit your risk, and also specify the time you're supposed to be in a trade. And if it's not happening, is it a stop or that, you'll have to adjust the trade, do something to it, but not believe that it is right. Yeah, 5 bars, 10 bars, depending on the indicator. And with that, will help you making the key decisions of trading, because there is a lot of mistakes that retail traders make. When to enter, where to exit, where to put your stop, how much time to allocate at max. Yeah, because if you're not right after a certain period of time, you better leave the trade and put risk and reward in a meaningful balance. Don't put 3 times the risk to 1 time the reward because you want to be right. But this is all what we teach in our individual hours that we are working together at your best available time. So to give you an idea of what is needed to solve the game. We have a couple of publications where we mapped out that 76% of the retail traders are losing money. That's an unfortunate situation, and we want to help you to get through that. And we, now Christmas time is coming, we receive a lot of very nice Christmas cards, letters, or nowadays emails or messages where people got independent. They didn't have to do the move that their employer wanted to move them to. They could go to the city where they love to stay. They could stay at places or go around the world because the internet works. You are in business. You just need a meaningful computer, and with a meaningful internet, you are in business as a trader. And that's a big independence that you can give yourself, but you'll understand you cannot have that for $297 because your microchip in your head has to be programmed to see the same that I'm seeing in all these indicators. You have to learn the traffic rules, and we are doing that together, hoping and getting you to be the trader that you want to be. It'll take some time because, you know, our mind plays games with us. We do not see through our eyes, we see through our brain. And so therefore, the individual impressions that we get, they might not lead to the same conclusion. This is why we work individually, getting the same conclusion into your head, helping you to make the same decisions over and over. And we do that in a lot of areas. We do that for every account. That's set from 401k, IRA to day trading accounts. We'll work with you constructing a business plan. The business plan contains, first of all, an action plan. So when do you trade, how do you trade, and what do you do, and when do you not trade? Then it contains a financial plan. How often do you trade, which instruments, and what's your expectations out of that? And we go very conservative. And we work with money management so that you don't get drawdowns. We help you with trade repairs, never stop loss trading, repairing your trades, finding risk limiting strategies for any market, helping you to find trades either through our subscription, never loss trading alerts, or through scanners and watch list indicators that come with the systems. And we'll help you to translate these price move indications into buy stop and sell stop orders. Yeah, so that's the key that we want to invite you to. And if that's something for you, I'll offer you a 1 hour individually session where we can map out what suits you best and how we can help you putting that all in place for you to make a difference in this year and in the year to come. And for all the years to come, to be independent and to do what you do best, because many of our traders that can allow themselves day trading, they are done by noon. Many of our traders that have accounts where they do longer term investments, they make very high returns, and they work with us over the years in good communication, using the systems to make specific decisions at key price turning points. We are more than 10 years in business, and we have the algorithms that we all self-developed in-house. They are displaying themselves on Thinkorswim. However, you can put your orders in any system where basically the order flow and the draw from the market is going to be the same. Yeah, if you trade futures on Ninja, you just look at our charts and then put them into action. Yeah, so this is what a lot of people do, because the CME is going to be the exchange, and there is not a difference in the bid or ask and the quote. If I was able to excite you with all this, take the offer and we get together and we'll map out what we can do for you within doing also longer term strategies with hedging. It's important when these markets might tank or so, you need a protection. Most retail traders don't know how to do it. That's what we're there for. Yeah, we show you swing trading, event trading, whatever you desire. You don't have to do all of what's here on the portfolio. We'll work with you what you like to do and what's done best for you. And here's my offer: the $6,500 for trend catching plus, and the trade colors for $2,497. So it looks like I have another exciting 4 minutes. Do you have questions? And I hope I'll see them on the chat, and I'll be happy to answer those. Yeah, let me go and I look here. I see some chat questions. If that's not the case, as it seems to be, I'll entertain you a little. Yeah, so aside from our service where we have the indicators, we have the never loss trading alerts. Yeah, it's an alert service that come out some per week, some once per month, and the others daily. Yeah, so here the alert at the moment, that's for today, says risky to trade in every industry sector of the S&P 500. Yeah, so you see here, that's we have that in Excel. It's nothing that you want to print because there's so much information in the background, but here it says per industry sector, coming from technology, going all the way down to utility, all these markets are risky to trade. So if they are risky to trade, you need risk limited strategies if you want to be in it, or you need short-term strategies to participate in the details to limit yourself so that you're not exposing yourself to a drawdown at the very beginning of your trading career. So if this for you will help you, yeah, take the 1 hour opportunity that I'm giving you, and it shall help you to see on the charts the moment when to buy, when to sell, participating at key price handover points, as I showed you here on multiple of the charts that we had put in. So far, I see no questions. With that, I thank you very much for your attention. I hope to the one or the other of you, I have the opportunity to talk and consult you of what could fit you from our concepts. If you want to do that, write me an email. Yeah, that's mostly the easiest, or call the office. We're a Florida company. Yeah, we are out of Fort Lauderdale, and that's since 2008. Yeah, so therefore, for those who are more interested in what's going on and not yet committed, we have a blog, yeah, that you find out there. We also have a YouTube channel. You find all these details at neverlosttrading.com, our homepage. Yeah, and if you want contact, yeah, use the opportunity. I offered you that one ebook it takes the other side of your trade. There is integral information and good information that I want to share for free with you. So with that, at that point in time, I thank everybody for the participation. For those whom I'm not going to talk to, you have happy holidays and a happy new year and good trading.